your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Right now, we are looking at a mixed day for the U.S. stock market. We have got the S&P 500 index advancing by 7 points. That is a gain now of just about 0.1%. Dow Jones Industrial Average is advancing now, moving higher by just about 1 point. Little change. That perhaps the key takeaway right now on the Dow Jones Industrial Average. The NASDAQ Composite Index is advancing. We've got NASDAQ up now by just about 69 points. For NASDAQ, that is a gain right now of just about 0.4%. 10-year yield 4.09% with a 2-year that's yielding 4.32%. Some of the company stories that we are following for you at this hour. Amazon has abandoned its planned $1.4 billion acquisition of Roomba maker iRobot after clashing with European regulators who had threatened to block the deal. The decision is a sign of the intense pressure that Amazon is facing to prove its actions don't harm competition as its influence grows in retail, cloud computing, and entertainment. SoFi Technologies reached profitability for the first time, taking the fintech one step closer to CEO Anthony Noto's goal of turning the former anti-bank into a top 10 financial institution. SoFi is surging right now by 19.5%. The San Francisco-based company said 2024 will be a transition year, with the tech and financial services segments driving growth instead of the lending operation, one of SoFi's trademark businesses. But again, the key takeaway here, we've got SoFi shares surging now by 19.7%. SoFi up $1.50 now to $9.11. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to Balance of Power on Bloomberg Television and on Bloomberg Radio, where we, as always, have our eye on the 2024 race, as we are now just a few weeks out from the Republican primary in South Carolina, and shortly after that, Super Tuesday. And Nikki Haley says she'll be around for it all. On Meet the Press yesterday, she says she does intend to stick through the race through Super Tuesday, and she just needs to do better in South Carolina than she did in New Hampshire. Keep in mind that South Carolina is her home state. She served there as governor. Bloomberg's Christian Hall reports on the Haley campaign for us and is joining me now in our Washington, D.C. studio. So in many ways, Christian, this is really just keeping with the messaging we've been hearing from her since she came out on stage and conceded in New Hampshire. She signaled the race is not over, that 2 states are not going to decide this. But the going is going to get tougher for her as we get closer to South Carolina if she doesn't improve in polling from where she is now.
Absolutely. I know that she said that she plans on making it to Super Tuesday, but the big question for me is, can she continue through South Carolina? We've just seen over the last few days President Trump picking up pretty big endorsements from people in her home state. I mean, Senator Tim Scott, who she nominated to his Senate post, all of these really big names getting behind Donald Trump. So the big question is, will she be able to make a strong showing in South Carolina?
Well, and how will donors react to whatever showing she's going to put up? It's tomorrow, right? That in New York, she's going to have a big fundraiser that's co-hosted by the likes of Stan Druckenmiller and Ken Lengo and all these big Wall Street names. They still, at least for now, seem to be standing behind her.
Yeah, right now I think that, she did improve in New Hampshire following Iowa, so they're still excited about it. But, donors like to make a good investment. So they are going to want to see her improve significantly in South Carolina, I believe. So the stakes are very high.
Yeah, as they say, good money doesn't like to chase after bad. But she already has a lot of money in hand, right? They were making a big to-do about the fact that after DeSantis dropped out of the race after Iowa, she raised, $1.5 million in the 2 days after, then raised another million after New Hampshire. How much does she have in the coffers right now?
Well, she's in a really good place right now. I think that, one of the differences between her and DeSantis is that you started seeing that he was running out of money, right? Mm-hmm. She has what it takes to continue through South Carolina Super Tuesday just from a financial perspective right now. She's in a really good place.
Well, and if you still have the money to play in the game, I guess why not play
Exactly.
it? That may be the calculation here. Looking forward to your continued reporting on her campaign for however much longer it lasts. Bloomberg's Christian Hall, thank you. We appreciate your time. And we're about to turn the baton, hand the baton. Carol Massar, what's the phrase? I'm going to give you the reins. Carol Massar and Tim Stenovic.
Kaylee Lyons, you can say whatever you want. You can pass the baton. You can, like over the weekend, what is it like? Nice little
football.
throw the football.
Yeah, do that thing.
Keep it on.
There's a lot going on. And that's what kind of is our setup. It does feel like markets kind of holding time. You talk about Super Tuesday. You guys are looking forward to it. We have our own Super Tuesday. We've got Microsoft and Alphabet reporting tomorrow. And then on Thursday, we've got a Super Thursday with Amazon and Apple. So it's going to kind of keep us busy.
Oh, and then what's Friday? Jobs numbers for the
that's right.
prior
That
month?
little
for this
thing.
current month? Yeah.
And the Fed Wednesday.
Oh, yeah, that old thing.
We feel a little overwhelmed on this Monday.
It means though, like we're back. I mean, we are like this is we've been busy for a few weeks into the new year, but this really feels like we are back now.
And you talk geopolitics. We are watching very much what will be the U.S. response to what happened over the weekend in the Middle East. We are also nervous about escalation, but we'll see what we have a former Major General of the Marine Corps who was in that region for a long time. So we're going to see what he has to say about response and retaliation.
Yeah, I'll look forward to hearing that as we have Admiral Kirby of the National Security Council saying that the U.S. will respond to that deadly attack on our schedule. I guess we'll all be staying tuned for what schedule that is. But I know Bloomberg Business Week is next on the schedule, so stay tuned to listen to Carol Massar and Tim Stenovic. You can find them on both Bloomberg Television and radio. Plus, you can find me later this evening on Balance of Power. That's at 5 p.m. Eastern Time, so join me then. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar.
I love looking at different things that are going on in our economy. The Fed president's kind of battled it out about what's going to happen next.
And Tim Stenovic.
This story really struck a chord with me. The cost of education. Consumers are out there spending money. They have jobs, and they're continuing to spend money.
On Bloomberg Radio.
And a very good afternoon, everyone. You know it is Monday, January 29th. We are Bloomberg Business Week live on TV, radio, YouTube, and, of course, Bloomberg Originals. And here is the setup at this hour. As we just talked with Kaylee, investors have a lot to focus on this week. We've got big earnings, right, Tim, from Microsoft, Apple, Alphabet, Amazon. You've got a Fed meeting.
And then some economic data, the first big batch of economic data, including the jobs report on Friday. Certainly feels like at least investors, although the S&P 500 hitting an intraday record, feel like we are in wait-and-see mode.
Yeah, there's a lot coming at them. So on that, and speaking of wait and see, we are waiting to see essentially what the U.S. response will be to that weekend deadly drone attack on a U.S. base in Jordan. It resulted in the first American deaths under enemy attack. At least that's how the military, although Tim, we've been talking about the stuff that's been going on in the Red Sea has resulted in some U.S. deaths as well.
Yeah, we saw that earlier this month, of course. This one, though, since the Israel-Hamas war flamed conflict in the region. We're going to be joined by a former U.S. Marine Corps Major General who spent years in the region a little bit later in the program.
Yeah, looking to see what he has learned about the region and what we can all learn from that experience. Also, Boeing reporting earnings this week, also on the earnings docket, amid a mea culpa, if you will, by the CEO of Boeing, Dave Calhoun. There's a lot of mixed views. There's some airlines coming out saying we're interested in maybe picking up some of those slots. Exactly. So there's a lot on that.
And what's going on with United?
Yeah, exactly.
Maybe they don't want those MAX 10s when they do finally get approved.
So we're going to do another Boeing checkup. Consumer sentiment way up. We've talked about that in the last couple of weeks, right?
Is everything awesome? I think everything's awesome.
I don't know if it is.
By some measures.
By some measures. Some Americans you would talk to say it's not so awesome. We've got the CEO of Vantage Score. They're going to talk about consumer financial stress that they are seeing and the holiday spending credit hangover. We all know we were all spending big time during the holidays.
Okay, well, speaking of spending, rollback, right? Rolling back prices at Walmart.
Yeah.
How about a $400,000 job at a Walmart store?
That is crazy.
Yeah.
But it's real, right?
It's real. It's not in the C-suite. It's a store manager.
All right, so we've got a lot on our docket on this Monday. First up, though, let's get to our Charlie Pellet with a check on the day's trade. Hey, Charlie.
Well, hello there. Happy Monday. Lots going on. And yes, we've got you covered because that's what we do here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing right now. 7-point gain for the S&P 500 index. We're up by about 0.2%. Stocks, bonds, and the dollar all seeing small moves. Traders bracing for a deluge of earnings and updates on the outlook for rates that will likely drive the direction of markets over the next few months. We've got the Dow now little changed, higher by 8. The S&P up 7, a gain there of 0.2%. The NASDAQ 100 index, full of those big tech names that report this week. Right now, the NASDAQ 100 index is up by about 0.4%. 10-year yield 4.09% with a 2-year that's yielding 4.31%. Gold up 0.4%. 20.25 the ounce, and West Texas Intermediate crude down 1.3%. 77 even for a barrel of WTI. Briefly, IBM has delivered a company-wide ultimatum to managers who are still working remotely, and that is move near an office or leave the company. All American managers must immediately report to an office or client location at least 3 days a week. This, according to a memo sent out to employees that was seen by Bloomberg. And by the way, that memo applies to everyone, regardless of current work location status. Again, recapping stocks right now, they are higher. S&P up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that setup on this Monday. So with all that's going on, market watchers, and many of them, and business executives continue to remind us we cannot forget what is going on geopolitically. And on that, the White House is certainly contemplating its next move, weighing potential responses to that deadly attack on a U.S. base in Jordan by Iran-backed militants over the weekend that killed 3 U.S. soldiers, said to be the first Americans to die from such an attack since regional tensions were inflamed, Tim, by the start of the Israel-Hamas war in Gaza, which of course started back in October.
Yeah, Pentagon Press Secretary, Air Force Brigadier General Pat Ryder was on Bloomberg surveillance earlier this morning and addressed a possible U.S. response.
We will take deliberate, appropriate action. Our focus here is not to broaden a conflict from the very beginning. We've been very focused on ensuring that the situation in Israel does not broaden into a wider regional conflict. Unfortunately, what you have here are Iranian proxy groups that are exploiting the situation and conducting these types of illegal attacks against forces that are in the region to actually preserve peace and stability. So again, we're going to do what we need to do to protect our forces, while also cognizant of the fact that what we don't want is a wider regional conflict.
That was, of course, Pentagon Press Secretary, Air Force Brigadier General Pat Ryder on Bloomberg surveillance earlier this morning addressing a possible response. We do also hear from John Kirby, National Security Council Coordinator for Strategic Communications, speaking right now, who did say that the U.S. will respond on the U.S.'s schedule, not on anyone else's. All
right, so let's get to the interview. With us is retired Major General Maston Robinson. He served in combat zones in Liberia, Desert Storm, Somalia, Iraq, and Afghanistan. He commanded at every operational level in the Marine Corps, so he has seen a lot and has some very deep insight. He is geopolitical intelligence advisor and board member at Academy Securities Advisory. He joins us on Zoom from Greenville, South Carolina. Major Robinson, it is great to have you back with us. Curious in terms of appropriate response. I think we all wonder what that means. What goes into, first of all, you know firsthand, what goes into determining what is an appropriate response?
Thanks, Carol. The first step is attribution. You know, can you validate who did it? We certainly can validate where the drone came from, but whose fingerprints on the drone can be challenging, particularly when dealing with proxies. And you have to be careful when you're doing proxies. The tendency is to say who historically funds or supports the proxies, gloves off, let's go after them. And although that's a popular response, it isn't always necessarily the most defendable response. The second is you have to look at what's our capability to send a response, what's the message that it will send, what's our will to send a response, and then there's the dicey part of our credibility in the response. It's sort of like, you know, a parent, you know, with the child. I mean, you need to, when you say, I'm going to do something, I'm going to do it. So I think the Biden administration is definitely trying to figure out how hard of a response can they address? Can they be specific at the funder or the supporter, or is there a proxy they really can nail down to go after? They'll figure that out and they'll do something. Whether that'll have the desired effect or not is always the challenge.
Right.
Because these people don't think logically like we do, and they don't respond logically like we do for the most part.
Major General Robinson, what did you make of Senator Lindsey Graham of South Carolina over the weekend tweeting, "Hit Iran now, hit them hard"? First, what do you make of that? Second, does that make the White House's job more difficult?
I don't think it makes it more difficult. I mean, I think we live in a very political world, and people make statements for effect. Historically speaking, there's certainly an argument to be made that there have been administrations in the past, and I don't mean, going all the way back to the 1800s, but in the past who struck very specifically and very hard. And depending on whether you're talking about North Korea, Iran, an African nation, I mean, each one is independent in how you need to measure the calculus of what you're going to do, because they'll all respond differently. Some of them are very, very thick-skinned. Some of them, it doesn't really matter what you do. And some of them, if you can find the sweet spot, you may be able to do something. But attacking Iran right now, I'm not going to say it's a bad idea. I'm going to say it's a challenge as to what do you attack in Iran if you're going to do it, that you can publicly not just argue, but validate that they had a direct fingerprint on what happened. Therefore, this was a justified response.
So is it incorrect to believe that both Washington and Tehran are seeking to avoid a direct confrontation over the widening Middle East conflict? Is that incorrect for us to believe it, that both Iran and the U.S. do not want to see further escalation with those two specifically involved?
Yeah, I don't know that would be an accurate characterization. I think Iran doesn't necessarily want a widespread conflict, but what they definitely want is widespread disruption. They want to disrupt what's happened over the last year plus of going all the way back to the Abraham Accords and the potential partnership between Saudi and Israel, and the partnership within the Gulf that is not just oil-based, but has new economic opportunities. You've got both Egypt and Jordan pretty much saying we're not going to take on the fanaticals in our country. So there's a lot at stake here that's going on that's outside the parameters that I think Iran is very much trying to disrupt. But I wouldn't say they want a war with the U.S.
We have a partial map of the region, but to show where the drone attack was over the weekend that led to U.S. deaths, every time, General, that we look at a map of the Middle East, including the attack over the weekend, we see how close everyone is geographically. We're reminded of how it wouldn't take much for it to snowball. At the same time, seeing how close everyone is, it's reminded us of what many in the region must be thinking about, how easily it could get out of control and how much everyone in the region could stand to lose. And yet this is where we all lean on your experience in the region. You've kind of hinted at some of it. Is how does the region see it? Do they view more attacks as an escalation and something that to be worried about, or are they like, okay, maybe we'll gain something out of this?
Well, with the U.S. and maybe parts of Europe, probably have a different calculus than some of the rest of the world in regard to human life. I mean, nobody wants to see somebody die, but we probably put a bigger value on 3 soldiers, sailors, airmen, Marines that were in a remote area in a small logistics base on the border of Jordan and
Syria and Iraq.
They got hit by a indirect issue in their billeting space. The billeting space piece is probably what will get the most attention. That you weren't addressing them while they were doing something that was antagonistic, but you're addressing them while they're sleeping. Part of that is, how do we harden our facilities? How do we ensure that where they're sleeping is not as well known, is more hardened? The fact that it was 30 casualties, you probably can address some of that by a wider separation between who's sleeping where and how they're surrounding what they're sleeping in you're not going to put top cover on top of it that's going to be bulletproof. So it's always a threat anytime we deploy our forces overseas that they're going to be vulnerable because they're not going to be in hardened facilities. So part of this is a factor of if people strike us in a soft target like this, we will come after them and we'll make them pay. That's certainly something that I know the administration will be looking at is how do we hit back hard enough to where they go, ouch, I don't want to do that again. But how do we do it in such a way that it doesn't have a second or third order effect that we later regret? And I hate going down a political road, and this isn't political, but we can be victims. We can undermine our message by our previous messages. And so, the president's going to have he's going to have to be challenged to figure out how do we really hold Iran accountable and make sure they know that we take this very seriously and that we're not going away, because they will measure this whether we want them to or not.
Right.
And I'm not sure this is apples and apples, but they'll measure it against the pullout in Afghanistan. And the public statement is time for soldiers, sailors, airmen, Marine, the U.S. to stop dying in godforsaken places halfway around the world that we don't care about. That's not what the president intended. That's not what he would do a parallel to here. It's got nothing to do with that. It has to do with what's Iran hearing and what are they stringing together, and how do we send them a different message that makes them sit up and go, okay, this is different. This is not the run of the mill.
Major General, you, first and foremost, we're talking about a story that involves casualties, U.S. deaths. It's a human story. It's a story about conflict. But it's also a story that could have widespread economic implications, as we've seen play out in the region over the past few months. After all, you are an advisor and board member at Academy Securities Advisory. What is the way that you are providing advice right now to your clients, to your company? What is the thing that you're telling them about this conflict?
I think, unfortunately, we're probably faced with the Red Sea avenue of transportation, the Bab el-Mandeb Strait, the Red Sea, and the Suez Canal being certainly problematic. So that's probably somewhere around $1 million increased cost of that ship going down the Cape of Good Hope instead of going through the more direct route. So it's going to be a finance piece that will certainly bleed into inflation and the cost of things. It'll be an insurance piece for shipping that are in key shipping, because nobody's going to insure that ship going through an area that is problematic without really jacking the insurance up to ensuring it's being paid for. So it will impact the economy. Probably what's happening there in Syria will impact the economy less than what's happening by the Houthis and in the Red Sea.
But is that because you believe what's going on in the Red Sea, it's not going to wrap up anytime soon? It's going to be something that lingers, if you will, this year?
So again, the challenge is who's the audience, and if Iran, I think, is probably more rational than the Houthis. The Houthis don't really have an organizational structure, a national instinct that has them thinking through these calculuses like Iran will have to do as a nation that wants to be influential as a nation. And that's the challenge with irregulars, that are around the world. Honestly, in Yemen, the President Saleh was probably the most effective.
Yeah.
He never controlled the tribes. What he did was he, in essence, brought the tribes into Sana'a, bought their tribal leaders' villas, and kind of the premise, keep your friends close, your enemies closer.
Right.
He knew he couldn't control them, but he tried to influence them in ways that were unconventional. And that's sort of still what you got there with the Houthis and with Yemen as a nation that's more unstructured than Iran is as a nation.
All right. Well, some much appreciated insight, General. So thank you so much for joining us again. That's Major General Maston Robison, Geopolitical Intelligence Advisor to Academy Securities Advisor. He's also a member of their board, joining us on Zoom from Greenville, South Carolina. I feel like we started the new year talking about concerns about geopolitics. We continue to kind of cautiously use the word escalation. But nonetheless, I guess now we're just kind of waiting to see what the U.S. responds.
Notable to see not a big response from oil on this.
Not yet.
Yeah.
Yeah, exactly. All right, folks, just getting started on this Monday. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at a move higher for the Dow, the S&P, and NASDAQ. Stocks, bonds, and the dollar all seeing small moves. Traders bracing for a deluge of earnings, along with updates for the outlook for interest rates that will likely drive the direction of markets over the next few months. Right now, the Dow Jones Industrial Average is up 29 points, up by 0.1%. S&P higher by 11, up by about 0.2%. We've got NASDAQ up 83, a gain right now of 0.5%. 10-year yield, 4.09%, with a 2-year that's now yielding 4.32%. Spot gold is advancing by $7 the ounce to 2026, up by about 0.4%. And Bitcoin today, we've got Bitcoin right now trading higher by 2.7%, 43,111 on Bitcoin. Commodities, gold, spot gold, as we mentioned, up 0.3%. West Texas Intermediate crude up 1.9%, 76.54 for a barrel of WTI. So again, recapping, the Dow, the S&P, and NASDAQ all higher. S&P up 12 right now, 49.02, a gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. There's your update on the markets. And just to kind of remind you, Boeing shares kind of been bouncing around a little bit today. They've been up as much as 0.8%, down as much as 0.8%, so about a 1.6 swing from high to low. But right now, Tim, just a little bit lower, down about 0.5%.
We're talking about them because they're down nearly 20% since the near catastrophic blowout that left a gaping hole in a Boeing airborne plane and threw the company into crisis. Boeing CEO Dave Calhoun is on a mea culpa tour. He was in Washington last week, and this as Boeing gets ready to report earnings on Wednesday. Those results in the call with analysts are certainly crucial. One analyst described it, Carol, as a job interview for Calhoun.
Yeah, those analysts are probably going to be pretty tough this week. Meantime, the 737 MAX 9 model, it's flying again. China has also started taking deliveries on it after almost 5 years. We talked about that last week. And then you got Ryanair Holdings saying it would jump at the chance to grab at any extra Boeing 737 MAX jet deliveries from airlines who say, I don't want them. Ryanair says, give them to me.
Yeah, the big question is, what is United going to do with the 737 MAX 10? With us, back with us, I should say, is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson, who joins us on camera from Bloomberg Intelligence headquarters in Princeton. Good to have you with us, George. I want to get to everything we talked about in the conversation, but I want to start with these being back in the skies right now, because the travel firm Kayak, the online travel agency, made news last week when it allowed customers to filter whether or not they're going to be taking a 737 MAX 9. And it always leads me to the question when we talk about this stuff is, do customers, I'm not talking about the customers of Boeing like United, I'm talking about airline customers, like customers of the airlines, do they care what equipment they're flying on?
Yeah, so first, thanks for having me on. I always enjoy being here. But, you know, I think under normal circumstances, normal times, customers care a lot less. They get to the airport, they get on whatever airplane is out front. But I'm hearing more questions, too, from people asking me if I'd fly the airplane. I would. But I think since MCAS, you know, the crashes in 2019, and with this panel blowout, there's a lot more awareness about, you know, potential quality problems at Boeing, and customers are a lot more focused on the airplane, and that's just generally, obviously, bad for airlines flying the airplane.
So describe the situation for Boeing CEO Dave Calhoun come the earnings call this week on Wednesday. I'm just curious, it's not going to be an ordinary call. We know that. One analyst describing it as kind of a job interview for Dave Calhoun. So I don't know, how are you approaching it? What are you going to be looking for? What do you think are the most important things that need to be asked of this CEO?
Yeah, I mean, I guess the biggest question we all have is you know, the FAA has put this cap on production rates for the time being. A lot of folks in the analyst community, as well as myself, are just trying to figure out, Boeing was breaking to a rate 38 by the end of the year, by the end of 2023. And so the question is, does this cap include that 38? And if it does, I think that Boeing's delivery plans for 2024 could still be intact. That's away from the obvious, you know, questions about how Dave Calhoun is addressing the quality problems at his manufacturing business, which are critical, right, to the company, and probably the most important question on the call. But I do think, again, all analysts want to figure out, how should we really be thinking about deliveries in 2024? And I think we'll want to know what the customers are saying, right? We heard United came out with some pretty you know, some not so good statements about the Dash 10 and their willingness to wait for Boeing. We heard Ryanair chime in as, you know, as, hey, we'll take all we can. We'd like to hear what Calhoun's hearing from the rest of the customers about their concern with the airplane and Boeing's timing. That's important.
How do you see Boeing handling the quality issues? What's been your interpretation? What's your analysis?
So my analysis, we started saying this looked like a problem in the manufacturing process, not in the design, which is good from the standpoint that it means that there's no major engineering that has to change here to make this airplane and the airplanes are in the fleet flight worthy, safe. That's a positive.
And that's opposed to the MCAS. What happened with MCAS?
Yeah, that's opposed to what happened with MCAS, because MCAS is very much a design issue, and I think which can create much bigger costs. But to me, it's clear that the game plan that from pre-pandemic of I think less oversight on the factory floor and less training isn't going to work post-pandemic. There's been just so much turnover at both Boeing and its suppliers that I think these companies have to drop back to a much more basic form of manufacturing oversight where there's a lot of supervision on the lines and a lot more training because they lost a lot of their talent. So we're going to want to hear how he's going to fix that. Sorry, go ahead.
No, I interrupted you. Please finish.
Yeah, no, so we want to hear how he's going to fix that. And I think the challenge here is that means that Boeing and Spirit probably aren't going back to the margins we saw pre-pandemic anytime soon, because they've really got to dig in on the factory floor and create this constancy in what they're building. And that, again, it's going to be different than what they did before.
This is what I was going to say. There's a great story on the Bloomberg. Tim and I have been kind of kicking it around, but this idea that Walmart is offering some of its store managers up to $20,000 in stock grants, the opportunity to maybe make $400,000 a year, I guess, depending on the location and job. But what I'm wondering is, so many CEOs come in here, leaders of institutions, and say, it's all about the worker. We've got to take care of our worker. That's the most important, the company culture. Is that what it comes down to, Boeing, and whether that's money and oversight or whatever the heck it is? George, does it really just kind of come down to that?
I do think it comes down to that, right? I think this business is very much different than other manufacturing businesses, I've looked at over the years. If you go to an auto plant, you'll find a lot of automation, you'll find a lot of standardization, and those two items help them sort of manage a really big workforce that can have different levels of skills, different levels of training. The automation helps fix some of those challenges. Aerospace doesn't have that. These aerospace factories have been around since World War II. There are not a lot of automated processes in it. It's not hugely standardized, and it needs 100% right quality on day one. And again, what I think this means is you've lost some of those workers that have been there for decades, and it means the company is going to have to reinvest in people, reinvest in training, and not be worried so much about delivering dividends and share buybacks, but it's making sure the product is higher quality.
Which they were doing, right, for a long time, as you said. We were looking at a chart before we came in the studio. I mean, obviously prior to the problems with the 737 a few years ago, but they did that, right, to keep investors happy, and obviously they haven't been able to do it, but yeah.
I mean, George, do you think that they can pull that off? There's a lot of competition for talent at the highest end. I mean, they could go, these engineers could go work at places like SpaceX and Blue Origin, and it's not just Boeing that's out there. These engineers could go work at some of the tech companies too. We've written about this brain drain.
Agreed. So I was at a supplier conference last week, oddly enough, and a lot of what I heard at the supplier conference is it's really hard to retain talent. People would rather go work at Amazon, or Google, or it depends where they are in sort of the skill range. So it's going to be hard. It's going to take money. It's going to take finding people that love aerospace, and I think that's a little harder too now. Like I think people in my generation grew up. We saw the space shuttle. We kind of idealized pilots. This generation, I think, much less. This is more of a tech generation. So they're going to have to go out and find those people that love aerospace, love aviation. I do think they're going to have to pay up for it as well. And I think they'll have to get over the idea that previous Boeing CEOs would just tout, they call it a cash-generating machine. It's not a cash-generating machine, right? It's an airplane company. Focusing on engineering, focus on quality manufacturing. They've got to get back to those core values.
Hey, one last question. Can they automate more, Boeing, in terms of what they manufacture? I see you shaking your head. Just got about 40 seconds.
Really hard.
Yeah.
Auto plants put 400,000 cars through them a year or something like that in a typical one. These plants put 500 airplanes through it a year. really hard to spend that money and automate it. And a lot of the processes are just hard to automate.
Amazing, amazing,
George,
amazing. Yeah.
Love it when you join us. Really appreciate you taking the time this afternoon. That's George Ferguson, Bloomberg Intelligence's senior aerospace, defense, and airlines analyst, joining us from Bloomberg Intelligence headquarters in Princeton. Those earnings happening later this week, Carol. Certainly investors are going to be watching. Also listening for any commentary that the company has about its own customers, the United Airlines, the Ryanairs.
Absolutely.
Those customers that have been uniquely outspoken in the wake of this near calamity.
I can see the question. So is United saying we don't want to buy anymore? Is so-and-so saying we don't want to buy anymore? We're done. Moving on. So it's going to be, I would assume, a pretty heated conversation. Boeing shares, as you mentioned at the top, they're down about 21, almost 22% so far here in 2024. We will get those earnings before the market on Wednesday, so we'll be watching very, very closely.
Hey, in the meantime, let's get to Washington, D.C. now for a check on the latest world and national news. We got Nancy Lyons standing by in the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. Defense Secretary Lloyd Austin is addressing the weekend attack at a U.S. base in Jordan that killed 3 Americans. He spoke during a bilateral meeting with NATO Secretary General Jens Stoltenberg.
Let me start with my outrage and sorrow for the death of 3 brave U.S. troops in Jordan and for the other troops who were wounded. The President and I will not tolerate attack on U.S. forces, and we will take all necessary actions to defend the U.S. and our troops.
Defense Secretary Austin is back at work at the Pentagon after having surgery, then some complications from prostate cancer. His absence sparked an uproar since he did not disclose his illness for several days. King Charles III is out of the hospital following surgery to treat his enlarged prostate. He spent 3 nights at the London clinic and was seen waving to onlookers as he departed. He checked out of the hospital just hours after Kate, Princess of Wales, left the same facility. She'd been recovering from abdominal surgery. New York writer E. Jean Carroll is speaking out about the jury award she received in her defamation suit against former President Trump. She told ABC's Good Morning America how she felt leaving the courthouse.
The elation was so great on Friday. It filled me up. It was almost painful. It's taken really every day. Today, I'm just very happy.
A federal jury ordered Trump to pay $65 million in punitive damages, $18.3 million in compensatory damages to Carroll. That's at the conclusion of the defamation trial that was first filed in 2019. The PGA is about to receive an infusion of cash from a U.S. consortium. That's what Bloomberg is hearing from those close to the situation. The initial investment from Strategic Sports Group would be about $3 billion, with an additional tranche from the Saudi Public Investment Fund. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ 100 index. We'll throw in the Russell 2000 as well. They are all moving higher right now. S&P up by 14. That is a gain of 0.3%. Dow Industrials, they're up 48, gain there of 0.1%. The NASDAQ Composite Index up 94, higher by 0.6%. By the way, the S&P could see a record today, 49.05 right now. It is higher by 0.3%. 10-year yield right now, 4.09%. We have got the 2-year yielding 4.31%. Spot gold down $7.50 the ounce to 2026. That is a gain of 0.4%. To be clear, we got gold up 0.7%, up by 0.4%. 2026 the ounce on gold. Bitcoin today also advancing, now up 2.7%. 41,119 on Bitcoin. West Texas Intermediate crude oil is retreating by 1.5%. We've got Brent crude down 1.3%. Barrel of Brent now at 82.49. So again, recapping, the Dow, the S&P, NASDAQ, they are all advancing today. Ryanair Holdings says it will jump at the chance to grab any extra Boeing 737 MAX jet deliveries from airlines that don't want them. Lending support to the embattled U.S. plane maker under fire for quality lapses after a mid-air panel blowout this month. We've got Ryanair, the ADRs up 2.7%. Boeing shares, which, by the way, reports Wednesday, Boeing down now by 0.5%. Recapping, S&P up 13, gain there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So one of the things that we love talking about is what's going on with the consumer, the health of the consumer. We do it because it's so important in terms of U.S. economic momentum. And on that, Tim, we've had some recent economic reports showing robust gains in both personal income and spending in December. We also had consumer sentiment soaring in early January to its highest in about 3 years.
Don't forget about the Fed Beige Book. It found resilient consumer spending that helped propel the U.S. economy in recent weeks, offsetting weakness in other sectors like manufacturing. All sounds good.
Yeah, it does sound good.
Everything's great. Everything is awesome.
Not so fast, because credit card delinquency rates, sorry to be the bummer here, credit card delinquency rates have exceeded pre-pandemic levels, while the share of borrowers making only the minimum payment climbed above 10% for the first time since 2019. This is according to a Federal Reserve Bank of Philadelphia report, Tim, that was out earlier this month. So that's the bummer part.
Okay, well, let's get into it with our next guest, who's also tracking the credit health of the U.S. consumer. With us is the CEO of VantageScore, Silvio Tavares. Silvio, good to have you with us this afternoon. Here from San Francisco, we should note that VantageScore is a joint venture of Experian, Equifax, and TransUnion. It provides credit data, credit risk modeling, and analytics based out in the West Coast. So you got a recent report out, a December report. Talk to us about specific data points in the report that has you concerned.
Well, yeah, I think the main key point to start off with is that actually the overall consumer is healthy. You know, we measure the consumer credit health by the average Vantage score. A low Vantage score is 300, a perfect Vantage score is 850, and prime, which is the level where consumers usually get the best rate, is Vantage score 660. As you look through the end of December, we published this data today through our monthly credit gauge, the average consumer credit score was 701. So that's actually a pretty healthy score. But what that masks is an area of concern, because basically the consumer is experiencing a bit of a credit hangover.
So average is mean.
Yes, and the average and the mean are the same for credit scores typically, because you see that nice normal distribution.
Average and the median.
Right.
Yes,
Okay.
yes, correct.
So go ahead. You were saying, though, it masks some of the underlying maybe concerns there.
Exactly right, because what we saw in December, which is the data that we published today, was that all of a sudden you're starting to see some signs for concern in terms of the increase in credit card. Credit card balances in December were up over 8.2% on a year-over-year basis. That's a big jump. And as we look also at delinquencies, the rate at which people are paying their loans late, we're actually seeing that increase on a year-over-year basis. It's a little bit of an increase, but when you see that trend, that's always cause for concern. And so the consumer is experiencing a little bit of a credit hangover. They spent a lot in December, and we're going to watch that going through the balance of the year.
Does the credit hangover portend anything more concerning for you than people just owing more on their credit cards? I mean, what are the knock-on effects of this what has you concerned?
Well, the key concern is if this continues, you're going to see a rising level of defaults and delinquencies. And it's not all consumers are experiencing the same thing. So, for example, for the higher end, higher average age consumer, you're not seeing those delinquencies. But as you look to the lower credit tiers, Vantage Score subprime and near prime, there's where you're seeing a higher rate of concern. Now, as you look at banks, you know, I'm using the analogy credit hangover. Well, the banks are still serving drinks. We actually saw credit originations increase in the month of December compared to November, and also increase on a year-over-year basis. So banks, we expected were going to tighten. That didn't happen in December. We're actually seeing banks continue to lend really across most categories. And so we're going to watch that trend, because obviously if you have higher delinquencies coupled with increased lending, that's not a good picture for banks.
We have a chart to share with everybody, and it does show what you guys have seen in terms of credit card balances over the last 4 years. So you can just see from November 22, from December 2022 to November 2023, December 2023, you can see the uptick and the build, right? That gradual build in terms of credit card balances. Having said that, Silvio, give us an idea of, you guys are getting data, right, from all the credit reporting agencies?
Yes.
I mean, so is it a nice cross-section, if you will, in terms of the U.S. population?
Yes, very much so. We have the most authoritative source on that data, because Vantage Score actually scores approximately 30 million more consumers than the conventional credit scores. We're used by 8 of the top 10 banks and over 3,000 banks and fintechs. We grew at 30% last year, and approximately 19 billion Vantage Scores were used. So it's the most authoritative source. And that's the challenge with a lot of the economic data that you're seeing from other sources right now. It's backward looking. It's like driving in the rearview mirror.
Right.
We have the most recent data, and what it shows is overall the consumer's healthy, but we're starting to see some signs for concern. That delinquency rate increasing is one of them. The spike in credit card balances is another.
I mean, all this has me thinking about the power that the U.S. consumer has when it comes to the economy. I mean, this is an economy that the consumer certainly powers. Are there any macroeconomic takeaways that you can give us about credit score and what it means for consumer spending?
Yeah, well, the credit score, the Vantage Score, is the real authoritative source of credit health. And what we're seeing is it's becoming very much of a tale of two cities. Those older, more affluent consumers, Generation Xers, they're actually doing pretty well. So, for example, in December, we saw Generation Xers increasing their credit card balances. But those folks, you don't have to worry about them. They typically have higher average credit scores and higher wealth. What's more concerning is that younger and mid-tier consumer, and when you look forward, they're going to be facing some economic headwinds. The most significant one is student loans. We're seeing those student loans payments kick in.
Is one reason that their credit score isn't as high, or their Vantage Score isn't as high, is because potentially they don't own a house, they don't own an apartment, they don't have that credit history that younger generations or older generations had when they were their age?
100%. And what we see is that home ownership is a huge driver of wealth. The average home equity in a home today is $248,000. So if you have a home, you're doing pretty good. If you don't, you have more challenge. And that younger consumer doesn't have as much as an economic cushion to weather the storm against rising inflation and that higher average credit card statement that they have. They also don't have much of a cushion to pay for that unexpected loan repayment. And that's why it's so important. Recently, we saw some of the regulators actually mandate the use of Vantage Score for mortgage. And so we're going to be seeing a lot more of those younger consumers, those underserved consumers, getting a chance at their first home. And we expect that to really help with credit health.
I feel like these are a lot of the topics we've talked about in the last year or so. Is there anything, just 30 seconds left here, Silvio, that was surprising to you that you think our investing audience should know about? It might be whether it's cause of concern or cause of calm, if you will, just quickly.
Well, I think the most surprising thing, the most newsworthy thing is the reality that banks aren't tightening the way that we expected. We expected to see into December a cooling economy and banks really pulling back on their loans. We didn't see that. In fact, we saw the opposite. And so that's a key theme we're going to be watching throughout the year. Of course, the whole reason why the Fed increased rates is that they expected banks to tighten somewhat. And actually, we're seeing banks in a very principled way looking to maximize that net interest margin on new loans they're making. So we'll have to continue to monitor that.
All right, we've got to leave it there. Silvio Tavares, CEO at Vantage Score, joining us here in studio. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Delaware Supreme Court has ruled Cantor Fitzgerald does not have to pay 6 former partners a total of almost $9 million because the firm's non-compete agreements were not flawed. Amazon has abandoned its planned $1.4 billion acquisition of Roomba maker iRobot after clashing with European regulators who had threatened to block the deal. The decision is a sign of the intense pressure that Amazon is facing to prove its actions don't harm competition as its influence grows in retail, cloud computing, and entertainment. Amazon up right now by 0.7%. iRobot, though, it is plunging by 9.5%. SoFi Technologies reached profitability for the first time, taking the fintech a step closer to CEO Anthony Noto's goal of turning the former anti-bank into a top 10 financial institution. The San Francisco-based company says 2024 will be a transition year with the technology and financial services segments driving growth instead of the lending operation, one of SoFi's trademark businesses. SoFi shares are off the high of the day, but right now still up by just about 18%. Walmart is offering a new incentive for store managers, and that is annual stock grants. Those grants could boost pay to potentially more than $400,000. Walmart shares up today by about 0.2%. Bayer shares are slumping after the German conglomerate was ordered to pay around $2.3 billion to a former Roundup user who blamed the weed killer for his cancer. Bayer shares, they're trading lower now. We've got Bayer down by 4.6%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Carol Masser live from the Bloomberg studios in New York. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the 991 newsroom in D.C. Hey, Nance.
Thanks, Tim. The White House says it's weighing potential responses to a deadly drone attack on a U.S. base in Jordan by Iran-backed militants. This happened over the weekend. At a briefing this afternoon, National Security Council spokesman John Kirby said the response, whatever it may be, will be deliberate and not rushed.
We'll do that on our schedule, in our time, and we'll do it in the manner of the president's choosing as commander-in-chief. We'll also do it fully cognizant of the fact that these groups, backed by Tehran, have just taken the lives of American troops.
That's National Security Council spokesperson John Kirby. 3 U.S. troops were killed, dozens wounded in that attack. A spokesperson for Iran's foreign ministry says accusations of Tehran's involvement are baseless. Israeli Prime Minister Benjamin Netanyahu says a summit in Paris this weekend to negotiate a return of hostages held by Hamas in exchange for a ceasefire in Gaza. He says those talks were constructive, but significant gaps remain. His office says some of the differences will be ironed out during additional meetings this week. Spy chiefs and top officials from Qatar, Egypt, the U.S., and Israel met to try to secure the release of more than 100 hostages taken by Hamas in return for an end to the war. A former Internal Revenue Service contractor who stole and leaked the tax returns of former President Donald Trump and other billionaires has been sentenced to 5 years in prison. Charles Littlejohn pleaded guilty last fall to stealing Trump's tax data from the IRS and leaking it to the New York Times. Well, it never rains in Southern California. Well, you can't say that this week. The Golden State is about to get hit by a fast-moving atmospheric river coming off the Pacific Ocean. The system is expected to bring heavy rain and high winds. Some coastal ranges will see up to 8 inches of rain. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now
all right,
back
Nance.
to you, Carol and Tim.
Nance, thank you so much. Nancy Lyons, of course, in our D.C. newsroom. Want to pick up on something Charlie Pellet mentioned, because this story is both on our radar. Walmart store manager, their pay can reach up to $400,000. This is the result of the company out with a new program, and they're going to offer annual stock grants as a new incentive for store managers. So some of the most successful ones could ultimately make as much as $400,000, Tim.
That's the thing, the most successful ones. So the company did say in January the average store manager salary will increase from $117,000 to $128,000. And then you have a bonus system that puts store profits in a bigger role in determining the award. So if all goes according to plan, at least at the high end, that's when store managers can make that much money. I think it's really interesting, though, because we talk a lot about the labor market being tight over the last few years. The commentary that we've heard from companies is that employees are no longer in the driver's seat to the extent that they were during the pandemic and a little bit post-pandemic. But this goes to show the importance that Walmart is placing on attracting and retaining top talent at its stores.
Right. We talked about this in regards to Boeing with our own George Ferguson about, what they need to do to make sure that their employees who are highly skilled, highly trained, stay there on the job and make sure that there are no problems. So anyway, if you want to read more about it, just check it out at Bloomberg.com. Hey, for those of you watching on TV, coming up next is the close. For those of you staying with us, Bloomberg Business Week continues. And coming up, we're going to talk a little bit about Amazon saying bye-bye to iRobot. We're certainly seeing that play out in the markets today.
Plus, the so-called forever chemicals are everywhere. We're going to chat with one analyst who helps out companies in the supply chain process to figure out what to do with them.
We're actually going to go inside Steve Ballmer's $2 billion arena. Rick Fox, who used to play for the NBA, he's taken on big cement and their carbon emissions, so we're looking forward to that story as well.
Also, a big year in AI. What happens this week when all these companies report?
More Business Week coming your way. Studio here at Bloomberg headquarters in New York City. We're also on YouTube and, of course, on Bloomberg Originals. We got a lot coming up in the next couple of hours.
All right, we got a couple themes here, okay? We got an environment theme. So on the equity environment, Amazon up, iRobot down. We're going to check on the online behemoth just ahead of earnings.
We are indeed. And then on the environment.
That environment.
Yeah, we're going to talk about those so-called forever chemicals. They have been on top of mind for you and me for a while now. They're everywhere, so we're going to get into what companies are exactly doing about them.
Okay, and we also got an NBA theme. We donned boots, a vest, and a hard hat to get a look inside the Clippers' very expensive
but Ira
new home.
Boudway did.
That's true. It's the collective we, okay? Also, three-time NBA champ and former Celtic and Laker Rick Fox is going to stop by. He's taken on big cement and their carbon emissions.
Yeah, looking forward to both of those stories and what they are up to. And then we've got, 1 year into the AI boom, right? Remember about a year ago, we all just kind of like, whoa, what's going on after Microsoft make that big investment into ChatGPT? Well, on that, tech companies have yet to show how the hype translates into profits. Does that change this week when we've got two of the biggest AI stocks reporting? So what we're talking about, Alphabet and Microsoft.
All right, first up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Much. Check out the GIP chart on the S&P 500 index. Sudden move higher, straight up like a rocket. We got the S&P best level of the day right now, up 23 points. S&P at 49.14. That is a gain right now of 0.4%, on track for a record close for the S&P 500 index. Dow Industrials up 111, higher now by 0.3%. The Nasdaq Composite Index up 0.8%. Nasdaq higher by 130 points. But again, the quote on the S&P worth repeating, 49.15 is where we stand, up 24 points right now. That is a gain of 0.5%. Right now, we have got the 10-year yielding at 4.06%, with a 2-year yielding 4.30%. Spot gold higher by 0.6%, 20.40 the ounce on gold. Bitcoin up 2.7% right now, 43,094 on Bitcoin. And crude oil is advancing, actually declining. West Texas Intermediate crude down 1.4%, 76.92 for a barrel of WTI. Brent down 1.2%, 82.51 right now for a barrel of West Texas Intermediate crude. Again, just recapping on that S&P quote, up 23 now, up 0.5%. Lots of moving parts for the equity market this week. We got the jobs report Friday, a Fed decision Wednesday, and plenty of tech earnings before we get to Friday. Sophie Lund Yates is an equity analyst at Hargreaves Lansdowne in
I
London.
don't think we're going to be without challenges, and the flip side to that is I do think we're in a situation where there are a few more nerves in the market, so I do think any misses are going to be probably more punished than they are usually. But that said, I think that the fundamentals for a lot of these names, particularly the likes of Microsoft, are actually still incredibly strong. So I am actually going to this with some pretty broad optimism.
And again, she mentioned Microsoft shares up now by 1%. Alphabet, parent of Google, up now by 0.3%. Again, recapping, stocks are rallying right now. S&P up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we heard, it is a big week for Amazon. The company reporting earnings on Thursday, already making some big news today after dropping its $1.4 billion deal for the Roomba vacuum maker, iRobot.
Yeah, this after clashing with European Union regulators who had threatened to block the deal. iRobot shares, by the way, are tanking today, falling to their lowest intraday level since 2009. The company, iRobot, saying it will cut about 31% of its workforce, and the CEO is out. So they are feeling this in a big way.
Matt Day is technology reporter for Bloomberg News. He joins us on Zoom from Seattle. Also with us is Anurag Rana, senior tech analyst at Bloomberg Intelligence, joining us from our Chicago bureau. Matt, I want to start with you and just tell you what really sticks out to me about this iRobot acquisition. One is, for Amazon, this is a tiny, tiny amount of money. Talk to us a little bit about the history of this acquisition and why should we be focused on it?
So this wasn't a surprise. When Amazon did the deal, I've been watching them closely. iRobot sells most of their stuff. It's their largest retailer. It's been Amazon for many years. There's sort of a tight corporate relationship. They also, iRobot, that is, put their stuff on Amazon Web Services, the cloud computing division. They send execs back and forth to speaking engagements. These companies were really tight before the August 2022 deal got done. And, Roombas have always been a hot seller on Amazon. They knew this was a hot product, and Amazon's got this massive devices arm that's been working to kind of do all manner of internet-connected things in the home. The deal just made all the sense in the world from all of those perspectives way back when. But as you said, it is a pretty small dollars and cents value deal for them, but certainly something they'd hoped would expand their foothold in the smart home.
Anurag, come on in on this. I see you shaking your head because it does seem like a really small thing in the Amazon universe. I mean, we all love playing with the iRobot Roombas and our pets.
We have a robot. We have an iRobot knockoff at home, and it works too.
We had the real thing, and
you
they
got
work.
The real thing? Okay, yeah.
Different versions. I mean, they're a good product, but like in terms of the Amazon universe, Anurag, big deal? No.
No, it's not a big deal, but the consequences are big in our view for all the tech companies that the regulator, whether it's in the U.S. or the EU, they're not going to get anything passed by. So, if you have an M&A team, give them some other work because, it doesn't matter. The deals are not going to get done. So I think that's a bigger message for me because, if you think about it, a lot of these companies really want to go ahead, buy some new technology, expand, add more features to the Buy with Prime or the Prime membership. But it's going to be difficult for all these large companies to undertake any deals, and which is it's going to be interesting to see what software deals get done today if there are no buyers out there.
Matt, is that the impression that you're getting from talking to sources as well? That the bigger message here is that the largest tech companies who have for years been buying up competitors, buying up other companies to help their own business, those days are behind us?
Yeah, for sure. I mean, I think you poll analysts who follow Amazon, I bet you half of them would say they don't think that Amazon could do another billion-dollar acquisition in this environment, right? Which is definitely a change for them. It's not as if the antitrust scrutiny on Amazon and other big tech companies came out of nowhere, right? This has been brewing for a lot of years. But in the background, Amazon's still been acquiring stuff. They bought MGM, go back far enough, they bought Whole Foods, they bought Zoox, the robotaxi maker. They bought One Medical, which does concierge primary care services in the U.S., so they've still been able to acquire a ton of stuff until now, right? This would seem to mark a turning point, and I think folks wouldn't expect them to be able to do anything like this in the future.
Well, guys, and let me put it to you first, Matt. I mean, how important is this acquisition strategy of Amazon? In other words, to move kind of the growth needle for the company, top and bottom line?
For the whole company, it's not been terribly important, but for this sub-segment of it, devices, right? It's been really, really significant, right? You remember, go back, they bought Ring, the video doorbell maker. It helped jumpstart their presence in that category. They've grown in devices with some homegrown ideas, but also just by going out and buying stuff. And if they can't do that, it's kind of a different roadmap for them.
Anurag, to you as well, that question.
Yeah, if you look at it, for example, Amazon Web Services, a few years ago, they bought a company that could design chips. Now, when it comes to technology products like their cloud, sometimes you do need a small acquisitions because you don't have that function in-house and you want to accelerate development. It's going to be very difficult for them to do that. And I can bet you other companies, whether it's IBM or Oracle, they're not going to face that similar problem. So it's going to be fun to see how the mid-sized companies can capitalize on this and start spending a little bit more money in the market this year.
Anurag, does it mean that a lot of this stuff is going to go in-house? That if Amazon sees a competitor out there, let's say another Ring doorbell type of product in this environment, they're not, because they don't think they'll be able to buy that product, they're going to try to design it from the ground up, which doesn't always work.
Yeah, I mean, designing some of these things are not easy. It will take several years to do it. I mean, they may have to figure out how to give more value to the prime customers in another way, or whatever the tiny segment is. I'm more concerned about the cloud business in a sense that if there is something they need, whether it's a security software or we know a lot about AI-related, algorithms and things like that. I think, that's going to be a bigger, I would say, hindrance in terms of their moving forward if they're not able to deploy some capital in acquisitions.
Well, do you agree, Matt? And I want to dig deeper into cloud, but I'm like looking at, every day there's a ton of headlines on Amazon. Amazon offering buy now, pay later in Mexico via a fintech there. My husband over the weekend is like, hey, this One Medical, we're on Amazon Prime. Look what we can do. Like, I just trying to make sense of putting together the Amazon puzzle, which when, as Anurag says, more concerned about the cloud business. So how do you put it?
I have the real One Medical, not the knockoff, okay? I feel like I should tell you that.
I knew he was going to come back at me. I'm really sorry. I deserve to be whipped on that. But no, how do you, I don't know, this One Medical, could healthcare become a really big revenue mover or player, Matt, for Amazon?
Amazon's hoping so. They've since Jeff Bezos stepped back, Andy Jassy took charge of the company. They've really focused their bets around key areas that are big enough in scale that they could move the needle for a company that is already gigantic. Healthcare is such an obvious one. Yeah. Healthcare is a giant, just stack a wallet, and between pharmacy efforts, between One Medical and primary care, they're working at it. They got a lot of irons in the fire.
Yeah, and years ago they bought PillPack, so it expands on their acquisition of PillPack, trying to deliver medicine. Anurag, come on back in here and just weigh in on that. What's the next sort of sector that you see Amazon going after in terms of increasing value for Prime? I mean, Prime is such an engine, apart from AWS, for this company.
We're all stuck because of Prime.
Yeah, we really are.
Yeah, I mean, a few years ago, I was really hopeful that the combination between, Amazon and JP Morgan and Berkshire would have done something about this healthcare problem. But, the end market is there. Healthcare is probably the biggest untapped market for anybody who wants to do anything digital. And Amazon, rightly fit there. But I do not know, how successful they're going to be, because there is just so much of, one could call red tape or just, absolute inertia for change in that industry.
All right. So looking ahead to earnings this week, Anurag, you talked, you're more concerned about the cloud business. Is that what our audience, is that what investors need to be focusing on once again for this company?
Yeah, so I was concerned about the cloud business as it relates to acquisitions. Okay. I'm actually going into the quarter a lot more positive for the first time in several quarters, and I'm hoping they're going to go out and give good results on cloud and actually come out with a good and upbeat commentary about companies starting to spend again on the cloud. Cloud is a consumption model, and people had dialed it back over the last, let's say, 1.5 to 2 years. We think it's going to start improving, starting next quarter, and the growth rate should pick up throughout the year. So really optimistic about that, and that I think will drive not only AWS, but I think a lot of the software and the technology names.
All right, Matt, you haven't written the earnings preview piece yet, but
we were looking.
Analysts are certainly weighing in already. What are you hearing from your sources about what needs to be top of mind for them and for Amazon this week?
I think Amazon's got a lot of credit for kind of cutting costs and improving margins in retail. The big focus and the big, wild card is where does the cloud growth go? It certainly looked a little bit bleak coming down all of last year, but the question is, has it steadied? Is it going to go upward? Are they going to give us some kind of, Microsoft-like AI number to chew on? Those are kind of things that I'll be watching for.
Yeah, and okay, so that's obviously the main point. What about when it comes to the streaming side of things? There was one story that popped up on our radar too about Amazon looking to, put video into shopping carts and things like that.
Wow.
I mean, are there, Matt, other revenue streams when it comes to their content specifically that they can tap into? Or is it just kind of peripheral small things?
This one's a big one. This is the kind of ads coming to Prime Video offering. Like that's a huge, potentially untapped source of revenue for them, and definitely a business that's been growing quietly. The cloud gets all the headlines, but their ads business went from nothing to tens of billions of dollars in just a handful of years, right? To date, that's mostly, kind of search results and sponsored listings, on Amazon.com. But if they get this video push right, then, who knows? Maybe we're all shopping through our phones in a couple of years while we're watching Thursday Night Football.
That's certainly the world that Amazon wants us to be in. Anurag, talk to us a little bit about how you're viewing the ad possibility, the ad potential, the upside for Amazon. As Matt mentioned, I mean, AWS gets all the attention, but Amazon is really a heavyweight when it comes to advertising now. I guess my question is really about potentially alienating customers. I mean, when I buy something on Amazon now, I have to scroll pretty far down to find a result that's not sponsored.
Yeah, I mean, I'm going to echo Matt. And in fact, we recently published a big report on Amazon. And our biggest thesis now is that because of this digital advertising, Amazon's overall business is going to get far more profitable than it was before, because some of these revenue that comes in, it comes with very high margin. It could be north of 50, 60, 70%. So the business could be, go from 30 billion to 50 billion to 100 billion. I think this is really the secret sauce for Amazon over the next 3 to 5 years is how they're going to, raise their overall digital advertising business. I think one of the things you're seeing is in search, for example, people, instead of going straight to Google, they will go to Amazon and search for a product. Now, it's possible that this may not be at the expense of Google, but it is definitely at the expense of analog marketing, which could be, radio, TV, and other areas.
Yeah, guilty as charged. I do feel like, no, it's just, they have made it so easy in terms of delivery that, you're out there shopping and you're like, okay, well, what's the price on Amazon? Let me check it out. Having said that, guys, Matt, let me go back to you for a moment. I'm looking at a PE on Amazon of about almost 76, a forward-looking PE of almost 60. I'm not asking for a stock recommendation, but what are you hearing from the investment community about valuations?
I think Amazon has always been are they going to keep growing forever stock, right? And the question the last couple of years is like, oh no, have they matured a little bit coming out of the pandemic, right? Do we have to kind of reset for this? And given the run that the stock is on, you're not hearing a lot of that anymore, right?
Yeah.
They're kind of back to growth mode. At least people, the recommendation is just kind of unanimous in adoring the cuts and the direction that Andy Jassy has so far.
Stock was up 81% last year, and it's up another 6% already here in 2024.
No record highs, though. Lately.
52-week high right now.
Okay.
Yeah,
okay.
Not too bad.
Yeah, not too bad.
Yeah.
Hey, Anurag, I know you don't give recommendations at Bloomberg Intelligence, but give us your thoughts on valuation.
If you played
right
one
now.
on TV, what would you? No, I'm just kidding.
No, I'm not going to ask you to do that. I don't want you to get in trouble.
No, we don't want you in trouble.
Yeah, no, I mean, but the thing is, this is the common theme for all technology stocks right now. They've had an amazing run, and any hint of even small disappointment can bring down valuation for across the board. Now, as far as Amazon is concerned, I think the big thing that Matt said was, if you go back prior to the pandemic, they were spending, I think, $14-15 billion a year on CapEx. That's gone up to like 35-40 billion because of distribution centers and then cloud expansion. So I think, people do understand that is important for them to maintain their moat of distribution network as well as cloud. But I think down the road, we do expect a lot more profitability coming out of Amazon. And now, as far as valuation is concerned, I think the next, 3 weeks are very important, because if any hint of problem with slowdown in growth in the tech world is going to have wreak havoc across the board, not just for Amazon.
Well, and one last thing, Matt, to you. I think about, him taking the baton from Jeff Bezos. We all talk about how hard it is to take it over from a founder. It seems like so far he's doing just fine.
I think so. And to the extent there are questions, they're kind of cultural, right? Like Amazon for years and years was the we'll always grow, we'll always back you, take your time, do a long-term project, work really hard on it, but we'll kind of back you on that.
Yeah.
The question for Jassy, is he going to take those kind of big rolls of the dice that Jeff Bezos was famous for?
All right, guys, thank you so much. What a great setup in terms of the day's news, but really ahead of earnings. What are you thinking?
To your point, at a 52-week high, only about 6.5% off of all-time highs.
Yeah.
So it's getting back up there.
It's really kind of grinding its way up there,
Yeah.
right? Back to it. Guys, thank you so much. Matt Day, technology reporter for Bloomberg News on Zoom in Seattle, and our Anurag Rana, senior technology analyst at Bloomberg Intelligence from our Chicago Bureau. What?
Your household is pretty, stuck on Amazon. We are too.
Yeah.
Like Whole Foods and Whole Foods delivery, it is so much cheaper than going to the local grocery store where we live.
The ease, and I will say we're getting smarter of like, we don't just click buy, we try to create a cart and then we kind of look at it at the end of the week and
That's
say,
what we're
do we
doing
really
too.
need everything?
Amazon's pushing you to do that too with like delivery day.
Exactly.
Yeah.
I don't love all those, one item in a box. All right, guys, this is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pella. 321 on Wall Street. We do have stocks pushing higher. Stocks rose, bond yields fell. Traders are bracing for a deluge of earnings and updates on the outlook for interest rates that will likely drive the direction of markets over the next few months. After struggling to find solid footing earlier in the session, the S&P 500 index extended gains on news that the U.S. Treasury lowered its estimate for federal borrowing for the current quarter, a reduction unexpected expected by many dealers. In fact, right now we are at the best level of the day. S&P up 32. That is a gain of 0.6%. Dow Industrials up 184 now, up 0.5%. NASDAQ Composite Index up 161, higher now by just about 1%. And again, worth pointing out that the S&P 500 index at current levels poised to close at a record, also just about 75 points away from 5,000. 10-year yield 4.06% with a 2-year right now at 4.30%. Gold up 0.7%. 20.32 the ounce. Bitcoin up 2.7%. 43,092 on Bitcoin, while West Texas Intermediate crude down 1.4%. 76.99 for a barrel of WTI. Well, what about those market valuations? Is the exuberance getting irrational? Lori Calvasina is head of equity strategy at RBC Capital Markets, and she says, according to her models, no.
We actually found in the update of that model that we published over the weekend, it's pointing to a bull case of 5,500 on the S&P. That's not my target, so don't get too excited. I'm still at 5,150, but that just gives you a sense of, maybe how much more one of our bullish models has been saying we could actually go, and it would still be rational.
49.25 right now on the S&P. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Amazon calling off its planned $1.4 billion acquisition of Roomba maker iRobot after clashing with European Union regulators who had threatened to block the deal. Amazon right now up by a 1.2%, iRobot lower by 9%. Again, recapping, S&P 500 index up 34, up 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
They're playing basketball all around the world.
Well, they certainly will soon in a very expensive arena out on the West Coast. This is one of the most read stories on the Bloomberg terminal. It's about the most expensive basketball arena ever built. How much? Well, we're talking, quote, well north of $2 billion. That's a quote.
Does that even matter, though?
No.
To Steve Ballmer? I don't know. Here's some other numbers to chew on. The arena's got 1,160 toilets and urinals, 199 countdown clocks, a 44,000 square foot halo-shaped LED board, a floor-to-ceiling bank of 4,500 seats on one baseline, and one very enthusiastic and energetic team owner, none other than said Steve Ballmer.
Indeed. Well, last month, Bloomberg News Business of Sports reporter Ira Boudway flew out to L.A. and put on a safety vest, boots, and a helmet to get a tour of the new Intuit Arena. And he joins us here in the Bloomberg Interactive Broker studio, along with the editor of Bloomberg Business Week, Joel Weber. And Joel, I feel like, when you've got a well-known billionaire spending big time in sports, lots of superlatives, this is a story made for Bloomberg Business Week and the universe.
There's a genre here where we like to go to stadiums and actually see these facilities kind of come into being. And what's really fascinating about this one is in Los Angeles, the Clippers have always been sort of second fiddle to the Lakers. And forever they were sort of, their schedule had to not only work around the Clippers, but around the Lakers, but whatever else was also happening in LA. When Steve Ballmer bought the Clippers for $2 billion, it started this process to really kind of change the world's perception of what Clippers basketball will look like. The team is quite good, and beginning next season, they'll be playing in their own arena for the first time. He's a basketball junkie, and so his obsession with the stadium and the arena is, I think, this manifestation of that. And Ira got to, you got to wear a hard hat, right?
Yes.
With Ballmer.
Boots, vest, not with Ballmer.
Okay,
I was at Crypto.com Arena, where the Clippers currently play and share with the Lakers, with him, and then I got a tour with the team's president of business operations, Gillian Zucker.
Okay, so take us through like what this is going to be like as a fan of like what Ballmer is trying to build.
It's very interesting because he has a very distinct point of view with it. He wants all the fans basically out of their phones, locked in on the game, cheering loudly, providing a competitive advantage to the home team. He wants basically.
Why wouldn't you want that?
Yeah,
sounds great.
Isn't that why you're supposed to go to a game?
Yeah.
I got a few $2 billion to build a place where that can happen.
But if you want to maximize revenue, arguably you put hundreds of suites where people sort of chill out and kibitz during the game. He's not going for that approach, and he sees this as an alternative to the Lakers, and as a kind of hearkening back to an old style of fandom where you were engaged in the game throughout.
Is the idea that revenue growth happens when the fans get more excited, the team gets better, and then the ticket prices go up?
I think his idea is, look,
or is he Steve Ballmer and he doesn't? He's one of the wealthiest people in the world and doesn't care.
He wants 17,500 Steve Ballmers there with him.
Okay.
He is incredibly enthusiastic.
Is he that enthusiastic in person?
In person, he's everything that you've seen in the sort of famous Monkey Boy clips online. He brings that energy, and I think he wants that energy in the arena, and that's his first priority. I think they think that's compatible with making it work financially, and that the part of the reason it can work for the Clippers is that they need to be an alternative in the LA marketplace. The Lakers are one thing. The Clippers are going to be, in his mind, the place for the basketball purists who want to be on their feet all game long.
So to build this, how did they go about finding inspiration?
They went all over the world. They looked at soccer stadiums, and that's where they came up with the idea of having every fan walk down to their seats. So even if you're in the last row, you kind of enter from above and go down.
I love that idea.
Yeah.
Like you just, it never occurred to me, but when you go to a basketball game, you kind of come in and then immediately like turn away from the court as you find your seat, which for me is always up at the top.
Right, in the nosebleeds. They borrowed that from there. They took ideas from all over the world, and everything was focused around the idea of, like I said, keeping people's attention on the game. So they have really limited concessions so that you don't wander the arena looking for your favorite item. They have
so there's like a consistency.
Yeah, it's like 8
hot
items.
dogs are hot dogs.
Yeah,
Don't go
exactly.
looking for that
Yeah,
other one.
and the way they're setting up the checkout is this frictionless. You walk in, you take what you want, you walk out. Don't stop to pay. Tim's
going to try and put everything on my credit card.
Exactly. They have these countdown clocks you mentioned, those 199 countdown clocks. Those are going to show people how much time is left in a timeout before they need to get back to their seats. Even the suites are set up so the seats are in your way. If you're standing in the sort of dining area, typically you can kind of lean on a counter and look out over the game while you're eating and drinking. He's got it set up, no, you got to get back out to your seat to watch the game, so you can't kind of multitask. And this wall is 51 rows of uninterrupted seats, no suites in the way, floor to ceiling, where you have to be a Clippers fan to get tickets. They're going to have a loyalty program where you have to post something on social media of yourself in a Clippers jersey or answer trivia questions in order to even get access to buying those tickets. And they want it to be like a kind of Cameron Indoor field house feel.
I love that, but I also am just going to guess there's going to be such a program to try and infiltrate that space and just be like the one Lakers fan in the Clippers.
That policing that is going to be really interesting.
Yeah.
They're in
Steve Ballmer is going to be watching that like a hawk.
In Europe, it's traditional. Like you can't wear away colors except for in the away supporters section of a football match there, but we don't have that tradition.
This is
here.
America.
Yeah.
Does the NBA have any say in terms of arena, in terms of what needs to be done, or no? An owner can kind of do what he wants, especially when it's his money.
There's a set of standards, but it's pretty you got to have so many seats and you got to have a certain level of amenities and stuff. But in terms of what he wants to do within that, there's a lot of latitude.
Okay, you didn't mention toilets, which I mentioned at the top.
Right.
Can you talk about?
It's definitely for the fans.
I'm sorry, Joel. I'm sorry. I wrote toilets, and I want people to know I'm not the only one obsessed with toilets. Okay.
Right.
I'm sorry. You go ahead, Joel.
Whatever your level of obsession with toilets, we're going to see if it tops Steve Ballmer's.
Okay.
Anybody who listens knows we are both obsessed with toilets.
So what was the number? How many toilets does this place have?
1,160, I believe.
Sounds like a
was
lot.
the last count. Yeah, they say it's 3 times the typical NBA arena ratio of seats to toilets. So, and again, the idea with that is he doesn't want you standing in line. The Clippers don't want you standing in line when the game's going on. So they're trying to get you in and out as fast as possible. And so Ballmer, was at the groundbreaking, did a reprise on his developers chant with toilets, toilets, toilets. The team, they're trying to get him to say fixtures and rope it in a little bit. But, it's just about basically he wants hopefully everyone watching the game for every second.
That's the contract. I want to know everything about that contract of just how you bid on toilets with Steve Ballmer. But look, it's easy to make light of this.
Yeah.
I so appreciate the attention to that level of detail. We've all been to games and waited in line to use the bathroom and been like, why am I waiting in line? and I'm speaking as a guy here. I mean, it's even worse for female.
Talk about we women.
Yeah.
Real quickly, are ticket prices going to go down? It sounds like this is all about for the fans. Do prices go down? We've only got about 25 seconds here.
Prices go up, and they are trying to.
Toilets
move,
are expensive.
Yes, this thing is more than $2 billion to build, and they're trying to move their fans over from the current arena and bring in new fans. And it's a pretty dazzling new venue that they have planned, so they need to pay for that, and they think fans will
helps that the team's pretty good.
Yeah, I mean that's a big piece. They've got a decent shot at a deep run in the playoffs. So.
Well, it's a killer story. It's among the most read, and so glad that we could spend some time talking with you. Of course, Ira Boudway, Business of Sports reporter at Bloomberg News, here in studio, along with the editor of Business Week, Jill Weber.
Let's go to Washington, D.C. now for an update on world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim, thanks. 3 American soldiers are dead, dozens of others wounded following a drone attack on a U.S. base in Jordan. This happened over the weekend. Defense Department spokesman Major General Pat Ryder spoke with Bloomberg about the next steps for the U.S.
We will take necessary action to protect our U.S. forces, no matter where they're serving around the world. I'm not going to telegraph or forecast any potential response from the United States because of this attack, other than to say there will be a response. And this kind of action will not be tolerated.
General Ryder says Iranian-backed proxy groups are exploiting the instability in the region to launch their attacks. Military officials say the drone used in the attack may have been confused with an American drone, which is why it was not shot down. GOP lawmakers are laying out their final case to impeach Homeland Security Secretary Alejandro Mayorkas. Bloomberg's Amy Morris has more.
House Republicans released 2 articles of impeachment against Secretary Mayorkas yesterday. The House Homeland Security Committee is scheduled to meet tomorrow to decide if it will go to the House floor. That'll pave the way for a quick House vote as soon as early next month to impeach him. House Speaker Mike Johnson says the House would take a final vote as soon as possible. DHS and the White House say Republicans are using impeachment as a political tool to provide campaign fodder. Republicans blame Mayorkas for record-high migrant encounters at the U.S. border. In Washington, Amy Morris, Bloomberg Radio.
British golfer Tyrrell Hatton is leaving the PGA Tour and is opting to go with Jon Rahm and Live Golf. The deal is reportedly worth $63 million. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. We are looking at records for the U.S. stock market. The S&P 500 index just pushing higher. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It was a quiet day today until the 3 p.m. announcement the Treasury cut its borrowing estimates. Stocks did spike, with the Dow now up 181 points. S&P's gained 32, while NASDAQ is higher by 1%. The U.S. 10-year yield fell to 4.08%. Gold is up 16. Oil trading in the red, and Bitcoin is higher by 2.6%. Among the main 11 S&P sectors, leaders were consumer discretionary and telecom. Only energy was in the red, and leaders to the upside in the Dow, Salesforce and Visa, while Verizon led to the downside. After earnings, SoFi rose as much as 20%, and in deal news, iRobot fell 9% after the company and Amazon agreed to terminate their deal. Wrapping things up, Whirlpool and F5 report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. To hear live breaking news over your Bloomberg, type SQUA, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session.
That's
first
it?
of the week. Yeah, 18. Yeah, under 18.
Are we going to hit record highs again?
I don't know, but it's really been interesting the last hour or so. I feel like since that one headline crossed, I don't know if there's a direct correlation of U.S. corporate bond sales hitting $176 billion to set a record in January. We have seen momentum build here in the trade, so we are just off our highs of the session for each of the 3 major equity averages. NASDAQ outpacing, up about 1% right now.
And right now, if we were to close right here on the S&P 500 at 49.23, would be closing at a record today.
Yeah, we've seen a few records taken out this year.
Hey, let's see what Jeff Crumpleman has to think about it. He's Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors. He joins us once again on a Zoom from Cincinnati. Jeff, we haven't seen you or heard from you in 2024, so Happy New Year. How are you?
I'm great. I think everybody's probably in a pretty good mood right now. So hopefully you guys are as well.
It didn't hurt to open up.
Market, yeah.
Didn't hurt to open up, right? Your 401k statements or pop it open at the end of the year. It was a good ending to the year.
Absolutely.
So you guys called this that you were bullish at the end of last year. Want to get to that in a minute, but I want to talk about 24 because you argue that this is a, quote, back to normal year. Normal economy, normal rates of inflation and interest rates, normal supply-demand conditions in the labor market, as well as levels of labor productivity and normal earnings growth. What makes you so confident that we are finally going to return to normal?
Well, I think, we were confident going into actually 2023, and I know you want to talk about 2024, but I think that sets the table for 2024, and we thought that 23 would be the inverse of 22. All the panic happened in 22. The stock market leads the economy, and the stock market thought we'd have a recession, and we would have very weak earnings. And our thesis last year, and the reason we were positive and continue today, is we thought we'd have better than feared outcomes on the economy and earnings, that we would have inflation calming, and that we would have the Fed peaking at interest rate levels that were actually quite normal. And that just kind of played out. And you know what? It's not different. It's not like that's some unusual thing. Most of the time, the fundamentals, the valuation levels, and the technical trends are neutral to positive. And that's where they've been the whole time. And it's everybody else that freaks out and thinks, well, that can't hold. And generally, the data comes out and it proves that, yeah, it's neutral to positive. And it remains that way. Inflation's calmed. We've gotten great economic news with regard to GDP for Q4, we had already had a strong Q3. Consumer confidence is up, retail sales is strong, and yet inflation's calming, and the Fed can kind of, chill a little bit here, while earnings look in that environment to grow about 10%. That, to me, explains normal. That's what normal is. And I would add to that, for everybody that's listening, that also means normal volatility, normal corrective action. The market generally, corrects 10 to 20% each and every year. So it's not a straight line up to new highs. We do have a target of 52 to 5,400 for this year. Last year, we had a target of 45 to 4,800, and we were right in between there. And not a lot has changed other than just confirmation that inflation's transitory and interest rates have stabilized.
Hold on.
Levels and earnings look good.
Carol, he said it. He said the T word.
Transitory?
Transitory.
Yeah.
That's like
fun.
a blast from the past. We all thought inflation was transitory. In the end, was it transitory?
Yeah, it kind of was, Wow. It's funny. We made fun of everybody that said it was transitory, and guess what? It was transitory.
Yeah, as a former gymnast, you got to stick that landing and you got to hold it. So I do think, right, we've seen certainly, if you look at the 6-month trend and so on and so forth in terms of inflation or the average, kind of rolling rate, if you will, we're at that 2%, in terms of what the Fed wants. It's just hard to understand if there are some underlying fundamentals that maybe push what the kind of lower end of rates should be, whether it pushes it up. When you look at something like, I don't know, the 2 or the 10 maybe is probably more important. I'm looking at 4 even. Is that kind of where we should be? That's normal going forward for you, Jeff?
Well, I'll tell you what's normal going back to almost the Civil War. If you look at the data, what's normal is 4.75%. That's the average 10-year yield at various data points. But yeah, we think that the range is going to be somewhere between 3.75 and 4.5. And the way you kind of, want to put that in perspective, if inflation's running, let's call it 2.5. Right now, the run rate's 2. Might that be getting ahead of ourselves to say we're at 2? Let's call it 2.5. The normal real yield is somewhere around 1 to 2%.
Right.
So if you add to that inflation a real or a 100 basis point to 200 basis point kind of real yield, then you're looking at a nominal yield of somewhere around 4.5%. So yeah, I think that's normal.
Hey Jeff, you got a ton of stocks that you sent us that you like. We don't have time to get to them all, but a couple that I want to highlight. Starting with Nvidia, you think there's still more room to run higher for Nvidia?
It's so funny. We look at it's almost like doing fantasy football, where we sit down and you do your picks once a year for something like that. 3 times a year, we really do a deep dive in all the stocks that we own, a deep dive on the fundamentals, evaluation, the technicals, and we rate and rank them. Nvidia is trading at 30 times earnings. They had 150% revenue growth last year, 250% earnings growth. And they're guiding for about 80% earnings growth this year, and yet they're trading at 30 times. So yeah, I think their end markets are really strong, and I do think that that's a very reasonable price for that kind of growth that's got some runway as GPUs and AI and cloud continue to do real well. And if you don't like NVIDIA, AMD would be also right in there with those same drivers and some real new product catalysts that could drive growth there, linked to the same kind of secular trends.
Well, and as it sits right now, NVIDIA is the second best performing stock in the S&P 500 this year, up about 26% so far this year. It was the number 1 in 2023. Advanced Micro Devices, AMD, is the 3rd best performing name in the S&P 500. It's up about 20%. No, number 2 is NVIDIA.
Okay.
Number 3 is AMD. Number 1 is Juniper, up about 26%. Yeah, so really some outperformance. Always fun. Happy New Year. Jeff Kruppelman, Chief Investment Strategist, Head of Equities over at Mariner Wealth Advisors, joining us on Zoom from Cincinnati. Folks, just about 10 minutes left in the trade. We're counting you down to the close in just a moment.
headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. SoFi Technology shares now up 19.5%. SoFi reached profitability for the first time, taking the fintech a step closer to CEO Anthony Noto's goal of turning the former anti-bank into a top 10 financial institution. The San Francisco-based company says 2024 is going to be a transition year, with the tech and financial services segments driving growth instead of the lending operation, one of SoFi's trademark businesses. Again, SoFi shares, they're advancing now by 19.5%. Amazon is pulling the plug on a pending acquisition of iRobot. More from Bloomberg's Sam Stolten.
Amazon has decided to withdraw from its planned $1.4 billion acquisition of Roomba robot vacuum cleaner iRobot after getting a lot of pressure from European Union regulators on the deal. The EU hadn't actually adopted a final decision, but reports last week suggested that it was going towards a block, and it seems to have pushed Amazon into the decision of deciding to step away from the deal.
And Bloomberg's Sam Stolten in Brussels reports Amazon will have to pay iRobot a $94 million termination fee. Right now, we have got iRobot shares down 9.7%, while Amazon is up by 1.2%. Some of the other stories that we are following for you: Bayer shares slumped today after the German conglomerate was ordered to pay about $2.3 billion to a former Roundup user who blamed the weed killer for his cancer. Today we have got shares of Bayer, the ADRs, slumping by 4.3%. And those are some of our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, folks, we're coming up just on the close on this Monday, just about 4.5 minutes away. We're going to head over to our TV folks in just a moment to talk about the markets and bring you down to that closing bell. In the meantime, this story, it's the Bloomberg Big Take. It's among our most read on the Bloomberg. It's something Tim and I talk a lot about, and that is the investment that we continue to see by investment companies, real estate companies, the play that is data centers.
Yeah, so I mean, I think of picks and shovels here when I think of this story, because AI, you know, if you want to invest in the chips, you obviously, investors have shown us that it's NVIDIA, increasingly now AMD, or if you want to invest in the companies that are working on it, you know, you have Microsoft, in addition to some of the private companies. What is Blackstone doing? They're betting on the AI revolution through data center operators. So it bought data center operator QTS back in 2021 for $10 billion. It's now bankrolling the development of massive structures that will handle crucial computing needs while also reshaping communities across America.
Yeah, it's just fascinating, the investment they're doing. This story, it's great. It's by our Dawn Lim. It is a Bloomberg exclusive, and it takes you to a highway, just off a highway in Phoenix. And she paints this great picture of cranes towering over a stretch of land larger than 60 football fields. The first of 5 hulking bunkers are under construction 30 miles away. Engineers plotting another complex on 400 acres, some 3 times the footprint of Mall of America, all but erasing the land's farming roots. And these both sites will be home to thousands of computers churning mountains of data powered by the energy needed for hundreds of thousands of homes. So this is, as she writes, Blackstone's bet on the AI revolution.
Yeah, she said it's part of the classic Blackstone playbook for real estate. So what they're doing is they're seeing the shortage centers on buildings that are needed to sustain the digital workings of modern life. And since the deal back a couple of years ago, demand for these data centers has exploded. The AI boom has taken hold. Metas and Microsofts of the world are increasingly relying on landlords for the space, and critically, electricity to run machines that train software to predict patterns from a deluge of text, images, and videos.
It's not a new idea, this idea of data centers and the investment in, but it does feel like since a year ago we started talking about the explosion of AI and the next level, generative AI, and what's needed, the data centers, in order to do that computation means we're going to need a lot more data centers. Check out this story. You can find it at Bloomberg.com and, of course, on the Bloomberg terminal. Right now, we're going to check out the markets, heading over to our TV colleagues, because Beyond the Bell, it starts right now.
Dow Jones Industrial Average higher by more than 200 points, or about 0.6%. The S&P 500 closing at a record high at 49.27 and change, up about 0.8%, while the NASDAQ 100 and NASDAQ Composite each higher by more than 1%. And your outperformer here on the day, that cyclical trade, back and forth today with the Russell 2000 moving higher by 1.7%.
All right, back to the S&P 500 I go, and you've got most names in the index higher, 366 to be exact, Scarlett, 135 to the downside, 2 unchanged.
And if you look at the sector performances, a lot of green on the Bloomberg IMAP when you break down the S&P 500. Consumer discretionary, tech, and communication services, those are basically the homes of big tech companies leading the way. The only real red spot there on that big pie is energy, down 0.2% as oil prices gave up early gains.
All right, everybody. We do want to get to some of the individual gainers. Just a quick headline there, crossing. General Motors boosting its quarterly dividend to 12 cents a share from 9 cents. The estimate was for 12 cents, so coming in as what the street was expecting. All right, back to some individual gainers as we await also some earnings. Let me go to ADM, Archer Daniels Midland. It's been in the news a lot over the last week. Really an outperformer, up about 5.5%. Remember, it tanked 24% ago 1 week today, wiping about $86 billion in market value. That's after the company said it was investigating accounting practices and procedures related to its nutrition business. But again, it's among the top gainers, #1 gainer, in fact, in the S&P 500 today. Moderna, also an outperformer among the S&P and NASDAQ 100 names. We'll bring it up for everybody. You can see Moderna up about 2% here, maybe almost 3% there. What's the matter? Do you want to jump in?
No.
Okay, sorry.
That's just the voices in your head, Carol.
Yeah, it's a busy crowd. All right, they're up about, Moderna up about 3%. Off its highs of the session. I didn't see any real market-moving news, but Fidelity Select Pharmaceuticals portfolio making some changes. They did boost their Moderna holdings, so just throwing that out. And then SoFi, thanks to Tim pointing this out and saying, you got to do this as a gainer today. Way outperformance, noting almost up about 20%, posting its first ever profit. Go figure. The CEO, Anthony Noto, saying it's going to be a transition year for the company with technology and financial services segment driving growth instead of lending operations. So they've been really trying to right this shift, but nonetheless, SoFi, a big gainer in today's session.
Now, can I interrupt here? You missed a big one today.
Which one?
Which one? Which one?
Lucid Motors. Yeah, big run up. Obviously, a much smaller stock.
I was going to do 4, but then I knew you'd get on my, case.
Well, I'm adding your 4th, up 27% here.
All yours, buddy.
Carol
all
Master,
yours.
thank you for that report. Tim, here with our decliners.
Okay, let's talk about iRobot. We've been talking about this one all day. Shares falling earlier in the session as much as 19% during the session, but closing down 8.8%. It hit its lowest intraday level going all the way back to 2009. This after Amazon and iRobot mutually agreed to terminate the August 2022 acquisition agreement. Also in the news today.
Isn't that insane that they made that announcement August 2022?
Yes, we've been talking about this.
And this wasn't even a gigantic acquisition. This should have just been like closed in 3 months and they would have been on with it.
We talked about this with Anurag Rana and Matt Day a little earlier in the program, and they said this speaks to the trouble that the big tech companies are going to have making any acquisition if they had so much trouble with iRobot, and that's the bigger story here. iRobot's trying to right its own ship. The company's CEO is out. They're restructuring, laying off about 31% of its workforce. That's about 350 employees. So TKO Group Holdings. This is another one. The news broke on Friday. This is the parent company of WWE and UFC. Shares falling, down 4.4% after Vince McMahon announced that he's resigning as chairman following allegations of sex trafficking by a former employee. McMahon has denied the allegations but said he's stepping down, quote, out of respect for the company. Shares down 4.4% today. And WBD US, Warner Brothers Discovery. How about a media stock to round it out? Down 1.22% today. Fell as much as 3.3% earlier in the session. Wells Fargo Securities cutting its recommendation on the stock to equal weight from overweight. Wells Fargo saying it expects a flattish multiple and cuts its estimates for the year.
All right, let's take a quick look at yields. Yields had started off the session drifting lower, and then that took a huge leg lower down right around 3 p.m. when we got, I guess, the contours of that Treasury refunding announcement, the idea that they're going to borrow less this year than they did in the previous cycle. You see the drop in yields across the curve, primarily in the belly, about 6 basis points lower on the 10-year, about 4 basis points lower on the longer end. Your 2-year yield also down about 3 to 4 basis points here. And what's going to be a week that's kind of a weird weird mashup of that micro and macro. Obviously, the macro will dominate, of course, with that big Fed meeting, Fed decision on Wednesday, and some big economic data, including the labor market report. But you got to overlay that on 100+ companies, including the biggest cap-weighted companies in the S&P reporting earnings.
Yeah, going to be really important, right? When we hear what we hear from Microsoft, Amazon, Apple, and Alphabet, that's going to be certainly big in terms of market sentiment and so on. Also, will be that Friday's jobs report that we will get. Do we want to do Whirlpool earnings? Should we just do that real quickly?
Yeah, let's do it.
Let's do it.
Whirlpool fourth quarter net sales, $5.1 billion almost, which is better than what analysts had anticipated, which was just under $5 billion. Fourth quarter ongoing EPS, $3.85, better than the estimated $3.71. For the full year revenue for 2024, it sees $16.9 billion. That is below what analysts had been anticipating, $17.68 billion. So that 2024 revenue forecast missing estimates might be why the stock is lower in after-hours trading.
Yeah, they've been talking a lot about, weak appliance demand, sales weakness, continuing into the new year. And you do feel like this is one of those companies that's had a major reset coming off the pandemic when everybody was, redoing their homes and clamoring for all of their appliances. And it's really been a change in tone in terms of their business. And maybe, again, we talked about Jeff Crumpelman talking about going back to normal.
Yeah.
Is this what we're going back to, just kind of normal business for Whirlpool?
Yeah, I mean, the question is, and we spoke to the CEO a few months ago who told us that, people aren't going out and making discretionary purchases like they were a couple of years ago, Romaine. What instead they're doing is they're saying, okay, well, I need a new washer or dryer, I need a new dishwasher, but I'm not going to buy that until this one actually breaks. Whereas a couple of years ago when they were flush with cash, they might have bought one, even if they weren't remodeling or redoing something.
Yeah, which is kind of ironic too when you're given how much prices on those big appliances have actually come down, at least based on the aggregate numbers that you see in those inflation reports. And it raises the question here about kind of the health of consumer spending. We keep talking about how that spending just kind of shifted to services, but if it's not going to shift back, if that cycle doesn't cycle back to goods here, what happens when services starts to falter?
All right, so I want to go back to what we started to talk about, what we get. We get a lot of big tech earnings this week. We've got a Fed meeting. We've got a jobs report on Friday. And I don't know whether that Walmart story that we got today, if you guys, I'm sure you saw it and you were talking about it, that they are possibly getting to a point where some of their store managers could make as much as $400,000. And this has to do with issuing them new stock grants, basically as a new incentive for them. And I do wonder whether that speaks once again, Scarlett, to the tightness that companies like Walmart and others are seeing continuing in the labor market.
Well, Walmart and other companies during the pandemic especially had a hard time hiring and retaining talent. So this is one of those ways that it's going to make sure that it holds on to its best employees. It should be noted that for those who work at larger stores and manage over hundreds of employees and manage the supply chain for that particular location, they're the ones who will qualify for that big bonus that gets them to $400,000.
Yeah, it's interesting to see this story now, not in 2021 when it was so difficult for employers to find employees, but it speaks to how difficult it is for companies to attract and retain talent. I mean, the unemployment rate is still sub 4%. Yep. We get an update on Friday if it remains the same. But obviously Walmart thinks that it's worth paying up in order to attract and retain the best talent.
All right, before we go, everybody happy about how the games played over the weekend, the NFL games?
I'm married to a 49er fan, diehard 49er fan.
All right, so that's good.
I'm in good shape.
What does that say about Taylor Swift, though? What does he think about the whole,
Is she going to perform at the halftime show?
I don't know, but I would doubt it.
I think it's
She's
Usher.
going to be busy.
Romaine, were you happy about the outcome?
You think it's Usher?
Isn't it Usher? It is Usher.
Yeah,
all right.
How dare you? How dare you?
Maybe she'll make a surprise appearance.
What does Taylor need to perform? That's all she did last year, just perform it.
She wants a break? Is that what you're saying?
Just let her have fun with her boyfriend and take in the game and let her know.
I
wonder how much of a ratings boost she's going to give to the Super Bowl. Because think about all the people who aren't really into sports.
My sister is now my sister who's never watched a game of football in her life is signing up for Peacock and watching.
Wow,
I'm totally serious. She has a Taylor Swift jersey. She watches. Yeah, I'm
for Peacock.
Yeah,
because it's not going to be broadcast.
Well, they had that one game that she had to catch on Peacock.
All right.
Remember that?
All right, kids, let's take this offline. All right, that's a wrap for our cross-platform coverage on radio, TV, YouTube, Bloomberg Originals. I try. It's not easy. All right, guys, we will see you again beyond the bell tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, when we talk about carbon emissions on our program and the path to net zero, we often talk about the carbon emissions associated with power generation, transportation, food production, a lot of things. There is, though, a big one lurking that doesn't get as much attention, although Business Week has been kind of certainly trying to get to it, and that is cement production, what goes into building materials. And manufacturing cement is responsible for 7% of global carbon dioxide emissions, more than what comes from all the trucks in the world. This, according to the International Energy Agency. That's an important stat.
It is. You're not going to believe where I'm going to go right now, okay?
I'm going to go there with you.
Three-time NBA champion Rick Fox is trying to do something about this. You know him from his time on the Boston Celtics and the Lakers, or maybe even as an actor or producer. He's got hundreds of movie and TV episode credits, but he's also the founder and CEO of Partana. It's a company that creates an alternative to Portland cement made of recycled ingredients. The company says it's, quote, developed the world's first building material that avoids emissions and removes carbon from the atmosphere. Rick Fox joins us here in the Bloomberg Interactive Brokers studio. Wow. I mean, okay, we talk about the NBA career, talk about your Hollywood career. How do you get to this part of your career?
What's Rick Fox doing in concrete?
Yeah.
Right? Yeah. The short version is a call to service. It started as a call to service to my home country in the Bahamas on the heels of a hurricane disaster, Dorian, in 2019. We were displaced, some 30,000 people were displaced, homes were destroyed, people were swept out to sea. And outside of donating money from my Bahamas Relief Foundation, I decided to get on the ground and start to ask the question of how do we build more hurricane resilient homes, more sustainable homes, to dig ourselves out of the $11 billion of debt that we were in as a country because of the repeated storms. Now, I grew up as a kid in the Bahamas where hurricanes were our version of an amusement park at the time in the 70s and 80s.
Yeah.
It wasn't as severe as you see today, and those storms are more and more frequent. So for me, it was a call to service to try and find a solution beyond just donating money. And that led me to a search around 2020 when the world shut down. And we can rest assured, Rick Fox is not the material science behind the technology here. We'll state that up front here. I have a number of scientists and partners who have been innovating concrete for decades. They're the best in the industry. One of them had been Cement Man of the Year. Others are on the board.
Hold on.
Yeah,
Cement
there's
Man
such
of
a
the
thing,
Year.
right?
Yeah, I was not
There
aware
is
there
such
was
a
a Cement
thing.
Man of the Year. Well, congratulations to him.
Yeah, no, it's nice to have that. It reminds me of my Shaq and Kobe days when you have some of the best in the business to work with. So they've been innovating concrete, and over the course of some 6 years of rigorous innovation, they got to this material, not only catching lightning in a bottle for multitude of times in their careers, but in the case of Partana, I met them at a point when they were patenting this formula and trying to get it from lab into a commercial state. And so I formed a company along with my founder called Partana Global to bring that out of the lab and into the world.
Rick, tell us exactly what they're doing and what makes it sustainable and less impactful on the environment.
Yes, so the first thing that you may learn about cement as a binder in the production of concrete is that it takes an immense amount of energy to get to a clinker state, which allows you then to produce concrete. We are a plug-and-play solution without the heating and the emissions that come with the creation of clinker. We have 0 Portland cement in our production of concrete. We take upscale big industry waste, one product of it being from the slag industry to steel manufacturing industry, which is slag, and another one being brine, which is the desalination industry, where those waste materials are pumped into the ocean or pumped into landfills. We take them and through our process.
I know it can be devastating.
They can be extremely
Yeah.
devastating. When if you think about cement and its impact on the environment, heats up our planet, then it heats up our oceans and destroys our coral. It's a repeated cycle of negativity, right? We get to a nature-positive concrete by swapping out the binder that is Portland cement and replacing it with Partana. Those waste materials, through our process and our patented formula, get us to an interaction with CO2, which not only avoids the CO2 negative emissions when we produce it, but also absorbs and removes CO2 from the atmosphere in that carbonation process. So
don't trees do that?
Yeah, trees do it.
But how does a building do it?
Yeah.
Like it makes sense that a tree and its leaves do it.
Well, it's chemistry, right? So the magic of chemistry will generate the process through the interaction and activation of the brine in our mix. But even cement, the negativity of cement, it is also absorbing CO2. So let's not. The problem with cement is that it does so much harm on the front end that it can't celebrate the back end.
I mean, the actual manufacturing of it.
Yes, you can't celebrate the back end of it. And so in the case of our company, we had a 2-year close working relationship with one of the top manufacturers of cement products, Topworks out of Germany. They just validated us at the World of Concrete in Vegas as the only replacement for Portland cement in the concrete industry right now to date. Now, there are a lot of people out there reducing Portland cement in the production of concrete, but no one can 100% replace it, avoid and remove CO2 at the same time.
Who's backing the company? Venture capital was.
I give a huge gratitude and shout out to Cherubic Ventures, our angel investors that have been there from day one. They've brought a number of their network folks along with us, major individuals that have supported us. And now as we move towards this year, scaling being the next challenge, we're hoping to have the likes of some of the biggest movers in the world that can actually scale this.
Where are you right now in this? Like, how much have you raised?
Right now we've raised $30 million. So we're moving into this year now to scale 4 factories in different regions globally.
If it's so, it sounds like win-win.
Yes.
It would seem to me that anybody who was in the building environment would say, I'm in it. Let us help you scale it up.
Yes.
Is it cost a lot to do this?
So prices, in terms of manufacturing and CapEx, building a facility is something that's not exciting to investors when you're burying CapEx dollars.
Yeah.
But once you establish that, then you have the ability to generate return on that investment in our factories in the first year. So we turn around rather quickly here.
So the actual product is competitive with existing building material or existing concrete.
Right. So cement is a commodity. And as you can imagine, different parts of the world, depending on where you get your materials from, cement can be priced slightly all over the place, right? No different with our formula. The exciting part of our business model is we become a plug and play. When you go to a factory that is producing cement products today to get to concrete products, finished products, we can swap that in and out in a plug and play fashion in less than a week. So the excitement level there is no new equipment, no new materials. You're really taking out the binder of Portland cement and you're adding our binder of Partana. So that's so when you talk about the cost. Right. Cost is relative, right? I'll just say this one point I like to remind people. You will pay, depending on your problem, that'll determine what you're willing to pay, correct?
Agreed.
And so in the case of our products and material, we're making affordable homes in the Bahamas, some 1,000 homes, all the way up to luxury-based developments. So whether we're making a CMU block or pouring a bridge or a planter or whatever retail product you can make, you're going to find a wide range of product and pricing. But for us, we hope with scale to bring our products down below what cement products cost, which we know we can get to. And then on top of that, we generate an asset class at a bottom line in carbon credits that can be used for good and actually can incentivize our partners.
This is one of those interviews. You're going to have to come back because we're running out of time and we know we want to do more. Good luck. Let us know how things are going.
Thank you.
Rick Fox, of course, we appreciate your time today. Partana.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4:21 our time on Wall Street. The Dow, the S&P, NASDAQ all advancing. S&P 500 index at a record. Right now, 49.27 on the S&P. That's where we closed up today by about 0.8%. S&P higher by 37 points. Dow Industrials up 224 points. For the Dow, that was a gain of 0.6%. NASDAQ Composite Index up 172, higher today by 1.1%. 10-year yield 4.07% with a 2-year 4.31%. Gold up 0.7%. 2,031 the ounce. Bitcoin today up 2.9%. 43,181 on Bitcoin. And West Texas Intermediate crude slumped 1.3%. 76.98 for a barrel of WTI. Brent, the global benchmark, also lower today, down 1.2%. 82.53 for a barrel of WTI. Walmart shares up today by about 0.5%. Walmart is offering a new incentive for store managers, and that is annual stock grants beginning in April. All U.S. store managers will get as much as $20,000 in Walmart stock every year as the world's largest retailer seeks to attract and maintain staff. Again, recapping, stocks higher. S&P up 37, up by about 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, from rainwater in the Himalayas to whales off the Faroe
Islands.
I can't believe I
you
said
got to
that.
go there.
I know.
I haven't been there, but I want to go.
Well, whales off the Faroe Islands to groundwater in Minnesota. PFAS, so-called forever chemicals, have been detected in every corner of the planet and in the blood of almost every human tested. If you've been listening to us over the last couple of weeks, you know we were a little obsessed with this and trying to get to the bottom of it.
Well, it makes sense, though, because these so-called forever chemicals have been linked to an increasingly long list of health problems, including obesity, fertility issues, and cancer. And, Carol, there's a very high chance that we'll come into contact with them today. And they're almost certainly already in our bodies.
We talk about it a lot at home, I'm going to say.
Yeah.
We talked about it over the weekend. We wanted to understand a little bit more about them and on an industrial level, what's being done. Joining us is Callie Edgren. She is Senior Director of Sustainability over at Ascent. Ascent works with manufacturing companies to analyze their global supply chains and look for sustainability risks. And she focuses specifically on risks from PFAS. She joins us from Milwaukee, Wisconsin. She's on Zoom.
Hi.
Callie, great to have you here with us. You know, I was just thinking, I paused for a moment because I was just thinking about the conversation we were just having with Rick Fox about just looking for ways to do things that are sustainable and don't harm the environment. Like, how can we all get on board? And how do we unwind ourselves from how much as a society we rely on plastics, all different types of plastics for just about everything. I look around me and I'm surrounded by plastic. I look around at home, I'm surrounded by plastic.
Yeah, it's definitely a struggle because, of course, a lot of those things make life more convenient, right? And PFAS are no different. So I think that's the challenge, is we have to maybe adjust the way that we're living and our expectations for those materials as well, you know, before we can really get them out of our lives.
What do you mean by adjusting expectations? Sort of, is that just resigning to the notion that these are in our bodies and our lives?
Don't say that.
What does it mean, though?
Please.
So I think when I say that, think of something like a nonstick pan that's coated with Teflon, and that's a very
we got rid of those in our house.
Right, that's great. I love that you're all obsessed with PFAS because so am I. So a lot of people, though, you know, are maybe ready to make a shift to cast iron because it's a little less convenient and a little more work. And I think that's the challenge, and that's a struggle that a lot of manufacturers have, is this paradox between customers who want them to get rid of PFAS, and yet those customers maybe are ready to give up the properties that they're used to from PFAS. And I think that's the real challenge, right, is changing that understanding and expectations among customers as well.
Should we, as consumers, expect that it's got to be a slow transition just because they're so entrenched in the system? And can we really afford to slow down, or do we need to kind of do something radical? And what might that be, or how can we get there?
Well, I do think one radical disruption coming from manufacturers is 3M discontinuing the manufacture of PFAS. And this is kind of forcing everybody's hand, right? Because if you can't get the the parts anymore. It doesn't matter if you've designed them out or not, you can't make those products. So I do think we see some radical forces already affecting this change. And we'll have to see if some other chemical manufacturers follow 3M's lead and stop making those PFAS chemicals altogether. If you can't get the parts, it doesn't matter, you know, if you're in the scope of a regulation or not.
Right. They're going to exit all PFAS manufacturing by the end of 2025. How big is 3M compared to some of the other players that are out there?
If you look at the NGO ChemSec, it's a Swedish NGO, they've looked at the top 12 PFAS manufacturers in the world, and 3M is on that list. They're not the largest one, but they have a very broad range of PFAS chemicals. Of course, they've been making them for getting close to 100 years. So I think it is going to have a significant impact because they have a lot of niche chemicals that they're manufacturing as well. And again, their downstream customers are not going to be able to get those parts anymore.
Okay, so the cat's out of the bag. We know that when it comes to PFAS. I always like to ask people like you who live in these worlds day in and day out, Callie, how you have adjusted your lifestyle to live in a world like this. I mean, are you doing certain things at home that you think all of us should do because you're aware of the presence of these chemicals, apart from getting rid of nonstick?
Have you banned every plastic container in your home?
Well, I do have my glass water bottle here that I drink out of. Yeah, I get asked that question actually a lot. So of course there's the pans. I've changed my makeup. I've changed my dental floss. Definitely trying to avoid plastic for a number of reasons, not just PFAS. There's a lot of other chemicals in plastic, right? But then there's some other things that there's just not alternatives yet. So I am waiting for industry to somewhat catch up. I no longer spray my, winter boots with PFAS. So I just where you become aware of it, that's a choice that you can make and try to find an alternative.
Well, and I wonder if that's the first thing to do in terms of labeling, right? That if there is something on a product, we've done that with trans fats and different things, right? We're all very aware. Things like corn syrup, and just there are things that raise the awareness that if a consumer starts saying no, that's got to impact a company's decisions and their supply chain partners. Sure. Is that fair or?
Yeah, absolutely. And there's already a handful of state laws that are migrating towards this, especially for cookware. They're starting to require disclosure. In California, they have cleaning products disclosure rules. Of course, California also has Proposition 65, which has a few PFAS in it, and that has to be warned to consumers. So I do think that we're going to see more laws coming like that maybe we can't design it out yet, but we at least want to make sure that customers are aware before they buy the product what they're going to be exposed to. And I think we're going to see some growing state regulations along that line.
Much has been written over the past few years, and indeed even a decade, about how companies knew about these chemicals, what they did in terms of disposing these chemicals. You have an inside view on what these companies are doing, Callie. Are they doing the right thing right now?
Well, I don't want to speak to the past, but I do think that in the current regulatory framework, they absolutely are, at least certainly the companies that I engage with. I think it's important to point out that there are very few PFAS chemicals that have actually had laws written against them. And so what's happened in the past is the way companies were discharging maybe water from their processes that had some PFAS in it, they weren't doing anything that wasn't legal. And so I think the thing to note here is that our understanding of the hazards has changed, and we are looking backwards. We see things like Superfund is going to be adding some PFAS chemicals to it. So I do think there will be some reckoning coming, but it is important to note that most of those companies weren't actually, violating any regulations. We just are all becoming much more aware now of the hazards of PFAS.
Right. The EPA is, right, from my understanding, expected to release a list of known PFAS that companies must report. And so we know this is kind of coming down. A lot of industrial facilities, military locations, airports, wastewater plants. What's the number one reason for anyone who is listening and watching right now? why we should be really worried if we let this continue at the current rate in terms of the amount of PFAS that are out there.
I don't like to cause panic. But
I want to be smart and because you are in this and what people need to know.
I think first off, drinking water, right, is a large concern. And so a lot of states are enacting laws to start remediation of that drinking water. There are ways that you can filter PFAS out, it's expensive, but there are ways to do it. And I see a lot of state laws that are really focused on drinking water, soil, and air remediation. And that's certainly going to help, right? Let's get it out of the water that we live with every single day. I think that, more awareness of things, even choices, like I don't make microwave popcorn because there's PFAS in those bags. So that education for people of knowing your choices you can make
Didn't know
help.
that. Hey, 10 seconds. Where do we look to find this information? 10 seconds.
I think there's a lot of great resources out there. I mentioned the NGO ChemSec out of Sweden. They have a lot of great information on where PFAS can be found, and that's a great starting point.
Well, we so appreciate it. I feel smarter already and a little freaked out already too, but you shared it in a calm way. It's just things we need to know.
Just breathe in, breathe out, Carol.
A little meditation required right now. Kelly Edgren, Senior Director of Sustainability over Sent on Zoom from Milwaukee, Wisconsin.
Hey, let's go to Washington, D.C. now for a check on the latest world and national news for Nancy Lyons in the 99.1 Newsroom. Hey, Nance.
Thanks, Tim. U.S. Secretary of State Antony Blinken is issuing a warning to U.S. adversaries. It follows this weekend's drone attack that killed 3 U.S. service members and wounded dozens more. This happened in Jordan.
Anyone looking to take advantage of conflict in the Middle East and try to expand it, don't do it.
Blinken spoke following a meeting with the NATO Secretary General. President Biden today has been meeting with members of his national security team to discuss the latest developments regarding the attack and the possible U.S. response. Senate negotiators continue working on a bipartisan border security bill despite Speaker Johnson's vow that the measure will be dead on arrival in his chamber. White House Press Secretary Karine Jean-Pierre detailed some of the initiatives included.
This bipartisan agreement would deliver the resources the president asked for in his supplemental, like 1,300 new Border Patrol agents, 375 new immigration judges, 1,600 new asylum officers, 100 cutting-edge inspection machines to catch fentanyl. It would also provide a president with a new emergency authority to secure our border when it becomes overwhelmed.
Again, White House Press Secretary Karine Jean-Pierre. Over the weekend, President Biden said he would shut down the southern border if Congress sends him the bill. Republicans say Biden has executive authority to act without congressional approval. The PGA is about to receive an infusion of cash from a U.S. consortium. That's what Bloomberg is learning. The initial investment from Strategic Sports Group could be about $3 billion with an additional tranche of money from the Saudi Public Investment Fund. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 4:40 the time right now on Wall Street with the Dow, the S&P, NASDAQ all advancing. Stocks closed at the best level of the day. Records on the S&P higher by 37 points. Right now the S&P is at 49.27, higher by 0.8% today. The Dow up 224, up by 0.6%. NASDAQ Composite Index up 172, a gain there of 1.1%. Wall Street's busy week kicked off with gains in both stocks and bonds, with the Treasury surprising several traders after cutting its quarterly borrowing estimate to $760 billion. 10-year yield 4.07%, with a 2-year 4.32%. Gold up 0.6%, 2,031 the ounce. Bitcoin up 3%, 43,213 on Bitcoin. West Texas Intermediate crude down day there, falling 1.4%, 76.95 for a barrel of WTI. As for the overall market backdrop, Jeff Krumpelman is Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors, and he was a guest right here on Bloomberg Business Week.
The market generally, corrects 10 to 20% each and every year. So it's not a straight line up to new highs. We do have a target of 52 to 5,400 for this year. Last year, we had a target of 45 to 4,800, and we were right in between there.
And to put that all in context, 49.27 right now on the S&P 500 index. 5 of the so-called Magnificent 7 tech companies will deliver earnings this week. Among some of those tech names, Alphabet up today by 0.7%, Amazon up 1.3%, Microsoft up 1.4%, Apple down 0.4%, Meta Platforms up by 1.75%. Recapping, 10-year 4.07%, the 2-year right now, 2-year yield 4.32%, while the S&P 500 index was up 37, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as Tim and I have been talking about, big technology companies have spent the last year shouting about how new forms of artificial intelligence will transform their businesses. It was one undeniable theme of 2023, and it's already a theme this year.
Yeah, billions of dollars in investments, numerous chatbots, and promises to embed generative AI into products have captivated investors and driven some tech stocks to record highs. But Carol, a year into the AI boom, tech companies have yet to show how the hype translates into profits.
It's kind of a show me the money moment.
I was just going to say that.
So writes Bloomberg News technology reporter Jackie Davalos. She writes about this in today's Tech Daily newsletter, which you can subscribe to by going to Bloomberg.com/technology. It's a great wrap-up of some of the key things when it comes to the world of technology. Jackie joins us on Zoom from our Washington, D.C. bureau. Hey, Jackie, good to have you back with us. It is kind of a show me the money moment, but I also want to say, is it fair? We're only kind of early in on this, but how are you seeing it, and how are you writing about it, especially as we get ready for what Microsoft, Google, and some other big tech names to report this week?
It depends on what company you're looking at. Some investors in Alphabet would say it's still pretty early. The company has always really called itself an AI company, but generative artificial intelligence, which is the AI hype that we've seen over the past year, is really what's the focus here. Is that technology really starting to have an impact on how the company generates search advertising revenue? Is it being monetized in its YouTube business? Are we seeing it flow into the cloud business? For Google, it's still a little early because they've taken a much more gradual approach to rolling some of these features and tools out. When you look at Microsoft, Microsoft has been at the forefront of this from the beginning as the backer of OpenAI. That $13 billion investment in the company has really yielded some benefits. The first being, of course, you have its major productivity tools, Office 365, that with that technology embedded inside of it. That just got rolled out as Copilot in September. So it is a little early to see perhaps, how subscriptions have fared. But the company also opened that up to consumers and small businesses for sale in January. So to your point, Carol, we might start to see at least some qualitative commentary from management on the earnings call, but whether the company actually breaks that out as a figure of its own is still yet to be seen.
Jackie, what's the world that these tech companies are promising? We know what investors are interested in, and we know what investors want, but paint a picture for us about what this world looks like when our lives have been taken over by AI from these tech giants.
Well, hopefully it doesn't mean that a robot is speaking to you from Washington 10 years from now. But it's a version of its sort that humans will be far more productive, that we won't spend so much time on the menial tasks, the writing the emails or perhaps summarizing information that should only take us a few minutes, but procrastination included, sometimes it takes us a little bit closer to an hour. And what Microsoft and Google really have to their advantages here is that they have productivity tools that millions of people use on a daily basis. Google Docs, Google Sheets. Microsoft has Microsoft Word. I mean, the entire productivity suite that people have just used, whether it's in college or in their work lives. These tools, we've already gotten used to them, and now you're having Copilot, for example, on Microsoft's end, really making that even easier. You don't have to think before you can see the feature kind of pop up on your screen, and you can speak conversationally. That kind of takes the skill out of it in a way. You're able to get natural language results instead of kind of taking that extra step on Googling something, for example. So that's kind of the future that we have to look forward to, but it takes time. Human behavior doesn't shift on a dime.
Jackie, I think about it all the time when I'm writing, Tim and I writing scripts and writing up our show. And as I write, AI helps you finish the sentence, right? It kind of knows where you're going. And most of the time, it's actually right in terms of kind of getting the next word or the next couple of words. It's pretty remarkable. And I do think about a day where you can kind of script something generally or say, here's what I kind of need, put it together, and then I'll go over and edit it. And that might be a faster way and certainly complementary to what we do. Having said that, it is interesting. I mean, how are you, as we continue to get more on AI, thinking about it, and how is it comparable? People were saying, I feel like last year talked about it was like comparable to the introduction of the internet. Like, how are you guys? Because I feel like I'm not quite sure. Is it going to be life-changing, game-changing, or is it just going to be this wonderful general, like assist to everything we do?
Is it just like another Silicon Valley hype? That's a really fair question, Carol. We've seen a lot of widgets come out of the tech industry, and very few really catch on. But this is, I think, kind of equivalent to, one of the biggest chapters in technology. Whether that actually pans out in the time frame that investors want, of course, like in the next 3 to 5 years, that's yet to be seen, because you're seeing companies take a really different approach. Google doesn't want to disrupt its core search business by crowding it with AI features all at once. It's taking a very gradual strategy. Microsoft is, to a good degree, doing the same. It has a little bit less to lose on the search engine front, but this is kind of a moment where we are starting to think about how the way we consume information is changing, and generative AI is playing a major part in that.
What's interesting is, Carol, I told you this, right? Jackie, I tried to get ChatGPT to write an intro for the show.
You did do this.
Yeah, and it was terrible.
It was terrible.
I was like, write an introduction for Bloomberg Business Week about, X guest. And it was like generic. It was terrible. But I mean, it would be nice if somebody did work for me. We're just not there yet.
We're just not. And one of the things that this technology still has yet to improve on is the hallucinations. The accuracy is not all there. And companies have acknowledged this, which is why you see some of these versions being updated every few months. But as we see now, it's far better than what came out in November of 2022 when ChatGPT first took the world by storm.
Right, and the more all of us play with it, right, and the more information that gets into it, the better it gets. So I guess we will see. And I guess we'll see what Microsoft and Alphabet say on their earnings call, because we're all going to be like Googling, Googling still in the in their press releases.
You're not going to be ChatGPT.
We're going to be typing in AI or artificial intelligence.
But have you seen when you Google stuff, Carol? Now Google returns search results that are AI generated at the top. Yeah.
It's happening. All right, Jackie, thank you so much. A really good thing to think about as we get those earnings this week. Jackie Davallo, she's technology reporter at Bloomberg News, on Zoom from our Washington, D.C. bureau. Think we're going to all be replaced?
No, not yet.
Oh, not yet?
Not yet.
It's just timing.
Yes, eventually, but not yet.
It's just timing. This is Bloomberg.
News on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. SoFi Technologies reached profitability for the first time, taking the fintech a step closer to CEO Anthony Noto's goal of turning the former anti-bank into a top 10 financial institution. The San Francisco-based company said 2024 will be a transition year, with the tech and financial services segments driving growth instead of the lending operation, one of SoFi's trademark businesses. SoFi up today by $1.54, but that represented a percentage gain of 20.21%. And extremely busy for earnings, primarily big tech names, but Boeing will also be very much in focus on Wednesday. And let's get a preview now from Bloomberg's Dan Schwartzman.
Charlie, Boeing CEO Dave Calhoun has been on a mea culpa tour ever since a 737 MAX 9 jet lost an exterior panel mid-flight. Now he'll have to face the analysts and investors trying to quantify the financial fallout from the near-catastrophic blowout that left a gaping hole in the airborne plane and threw the company into crisis. The challenge facing Calhoun will be to appease investors enough to stem a hemorrhage in the stock while not appearing too preoccupied with financial metrics. Since the accident, criticism has mounted from regulators, lawmakers, and the flying public that Boeing has put too much focus on its stock performance in recent years and not enough on manufacturing quality. Charlie?
And that's Dan Schwartzman reporting. Boeing shares today did decline. Little change update for the rest of the market, but Boeing today was down by about 0.1%. Walmart is offering a new incentive for store managers, and that is annual stock grants. Those grants could boost pay to potentially more than $400,000 for Walmart store managers. Walmart up today by 0.5%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. Let's go from New York to Washington, D.C. now for a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom. Hey, Nance.
Hey, Tim. President Biden has been meeting today with his security team to weigh potential responses to a deadly drone attack over the weekend that took place at a U.S. base in Jordan. It's believed to have been carried out by Iran-backed militants. At a briefing this afternoon, National Security Council spokesman John Kelly says the response, whatever it is, will be deliberate and not rushed.
We'll do that on our schedule, in our time, and we'll do it in the manner of the president's choosing as commander-in-chief. We'll also do it fully cognizant of the fact that these groups, backed by Tehran, have just taken the lives of American troops.
That's National Security Council spokesperson John Kirby. 3 U.S. troops were killed, dozens wounded in the attack. NATO Secretary General Jens Stoltenberg plans to talk with members of Congress tomorrow on a wide range of issues, including funding for Ukraine as it fights Russia.
I'm confident that all NATO allies, also the United States, will continue to provide support to Ukraine because this is in our own security interest to do so. It will be a tragedy for the Ukrainians if President Putin wins, but it will also make the world more dangerous and all of us more insecure.
NATO Secretary General Jens Stoltenberg spoke after holding meetings today in Washington. A bipartisan group of senators is negotiating an agreement on a security-focused bill that pairs aid for Ukraine with border security funding. A former Internal Revenue Service contractor who stole and leaked the tax returns of former President Donald Trump and other billionaires has been sentenced to 5 years in prison. Charles Littlejohn pleaded guilty last fall to stealing Trump's tax data from the IRS and then leaking it to the New York Times. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nance, thank you so much. So get a spare $9,800 sitting around. What might you do with it?
Buy a hot tub?
Buy a hot tub?
I don't know. What
Maybe
would you do with
a
it?
super old used car?
Yeah.
Make a couple of mortgage payments?
Yes.
Or
all of the above.
Or
wow, go to the Super Bowl this year?
Yeah.
That's how much tickets cost.
Isn't that amazing? Tickets to attend the Super Bowl in Vegas, a rematch between the 2020 contenders, you know who they are the most expensive ever for the event, going for an average of $9,815 each. So far, we got a couple of weeks to go, according to reseller TickPick.
What is this, a Taylor Swift concert?
That's so true.
I mean, it kind of might be,
Hey,
right?
you know, it could be. She could like jump up on stage with Usher.
Okay,
Maybe
so
they could do something together.
this-
She's gonna be there. We expect she will.
How could she not be there? It's actually included in the story by our own Chris Palmieri. The February 11th matchup between the Kansas City Chiefs and the San Francisco 49ers is expected to be an exciting one. It includes last year's Super Bowl winner, the Chiefs, with Patrick Mahomes at quarterback and tight end Travis Kelce, lending star power thanks in part to his girlfriend, the singer. Do you know who it is?
Tay-Tay?
Yeah, is that, yeah, Taylor Swift. There's an incredible chart in here. That's the average price of a ticket, Carol.
It's so sad though in the story they don't even mention like